But the field has come a long way in recent years, and with the right engineering solutions, this new power source could eventually become competitive with more mature renewables like solar and wind.
I would have a lot more confidence in the successful wave energy companies today as opposed to like 20 years ago. But in the next few years, or maybe the next couple of decades, it will be more likely to be used in remote locations like islands that are otherwise dependent on expensive diesel power, or out at sea on gas decommissioning rigs, or for powering underwater autonomous vehicles.
So definitely wave energy can compete with other renewable energy sources, but I personally believe that this is not a competition. In order to have a 100% renewable energy friendly world, we need all renewable energy sources to work together.
Who are all these people from? Who are all these people from?
So can you please tell me? I'm not going to... please wait.
You know, I've covered a lot of companies. I've covered a lot of Machiavellian companies where, you know, people play rough. I don't think I've ever seen anything on the scale of Nissan.
He's making you, but you act for Nissan. I mean, it's corrupt. The system is...
One of the most dramatic elements was Ravinder Passi's home being raided by court officials in Yokohama.
You scared my wife. You scared my children. I worked in Nissan for 16 years.
So Rav Passi's journey into the darkest recesses of the Japanese corporate world started when he was the general counsel, the highest corporate lawyer position in the company.
In the past few minutes, Nissan has revealed that its chairman has been arrested after allegations of serious misconduct.
He was tasked with investigating Carlos Ghosn. And he was told, conduct an internal investigation and get to the heart of the matter. And then along the way, he started to notice serious conflicts of interest.
He is one of the few people who knows an extreme amount of detail regarding the alleged crimes by Carlos Ghosn, and he's now ready to tell his own story on the record about some of the events that happened.
My name is Ravinder Passi. I'm the former Global General Counsel of Nissan Motor Co. Limited. And you could say, yes, I had a front row seat in terms of what was going on.
When Carlos Ghosn saved Nissan years ago, he was depicted in Japanese comic books as this hero, and now maybe we'll see comic books where he's the villain.
In corporate Japan, Nissan was quite an unusual company. It was led for 2 decades by a non-Japanese executive.
Well, Carlos Ghosn was a hero in the Japanese business world. If you had a global business celebrity in Japan and worldwide, it was definitely Carlos Ghosn.
In a country with few foreigners at the top, he stood out. But over the years, he saved Nissan from bankruptcy, allied with Renault and Mitsubishi, and turned the alliance into one of the most competitive in the world.
Yet as the years went on, I think his ambitions changed a little bit. He started thinking about legacy plays, and one of them was to really tighten the alliance between Renault and Japan. And unbeknownst to him, there was a contingent of senior Nissan executives that were really felt threatened by that move. They really thought that they would lose complete control of the car company, and even in the government, there was probably a little bit of anxiety about a national champion in the auto industry falling under full-blown foreign control.
Carlos Ghosn was an auto industry leader, respected by many in Japan. Now he's in jail.
The arrest of Carlos Ghosn came completely out of the blue. This was in November of 2018. He was coming to Japan on Nissan's corporate jet for a regular executive meeting, and he was met on the tarmac by Japanese authorities who whisked him away to a jail and charged him with financial misconduct crimes.
So what happened was that a power struggle ensued inside the company, and somewhere along the way it was criminalized. By that I mean that there were allegations leveled at Carlos Ghosn about the way he reported his pay to Japanese authorities, the way he handled money inside the company, that in other contexts might have been a board action, might have been handled internally. A number of executives at Nissan decided to take this difference and take it over to the Tokyo prosecutor's office, and that unleashed a chain of events that would shake the entire auto industry.
So after Carlos Ghosn was arrested, Nissan launched an internal investigation into the events that led up to his arrest.
So Rav Passi was tasked with investigating Carlos Ghosn, and he was told, get to the heart of the matter, find out what Carlos Ghosn did wrong and bring it to our shareholders.
It's really complicated because you had various things coming out of the weeds. 2018, the investigation has started, and we become aware of matters in terms of conflicts, actions by certain individuals that cause some concern because things might not quite be what they seem.
So in our story, we really took a close look at Harinada and his role in Carlos Ghosn's downfall.
Harinada is one of the most fascinating figures inside Nissan. He's also a lawyer. He's originally Malaysian. Hello, Mr. Hari. And he had a meteoric rise through the company and became very, very close to Carlos Ghosn and other top figures. He had a front row seat at all the major strategic deliberations at the company. And when he discovered that Carlos Ghosn, as his final legacy play, was going to tighten the relationship between Renault and Nissan, he made a decision to go against Carlos Ghosn. And he became one of the key figures that decided that Carlos Ghosn had to go.
Harinada was somebody who actually recruited me into the company, so I have a long-standing relationship with him, or did have a long-standing relationship with him. For many, many years, he was a mentor. I had doubts about the credibility of the process right at the start. Harinada had a plea deal with the Tokyo prosecutors. Now, that suggests he was intrinsically involved in some of the wrongdoing, or the allegations of wrongdoing, and it just didn't smell right, just doesn't sit right.
So there was a basic conflict of interest. In other words, Harinada had to deliver results to Japanese prosecutors to avoid his own criminal liability, and he's accusing and leading the investigation of Carlos Ghosn.
Some of the people who had been involved in the original alleged crimes were also looking into the affairs themselves. Ravinder Pasi began pointing out some of these conflict of interest issues. And the reason for that is essentially his concern was for the company. If the company's own investigation into itself was compromised, that could lead to a very weak position in various lawsuits that it was dealing with across the world.
I had discussions with Harry, discussions with the statutory auditors about these conflicts, discussions with HR about some of these conflicts, because at that point, we reported into him. You know, at the time, everything was quite, as you can imagine, it was, we've got to do this, we've got to do that, we've got to move fast. But when you step back and look at some of these things, you just think, my God, what was going on here? Because me, members of my team, were being placed in immediate danger. Your chairman's been arrested, a representative director's been arrested. They both happen to be foreigners. And then now what we need to do, we're being instructed to do, is certain compliance professionals need to go into properties in Brazil, for example, and retrieve evidence. They've got to do it very carefully, because if they don't do it carefully, they're going to get convicted of criminal activities. And likewise, when a team of lawyers were commissioned to go to Lebanon, I mean, one of my immediate concerns was, why are lawyers from Nissan being sent to go to Lebanon to retrieve evidence? These are just lawyers, they're corporate lawyers from Nissan. You had revelations that a number of executives had benefited from share appreciation rights when they shouldn't have. I mean, you know, substantive amounts of money being taken by these guys when they weren't entitled to take them. And you do think, yes, how is this going to look later on? It's going to look quite concerning. So that triggered, for me, the sort of assessment that, well, I'm going to have to do something, because up until this point, I haven't put down on paper these conflicts and these issues.
So Rav Pasi makes a fateful move. He writes this letter to the board listing every suspicion he has in great detail, backed up by evidence, backed up by memos, of why this internal investigation had serious problems. He sends the letter to the board, and it's crickets. He doesn't hear much of anything.
Nothing happened thereafter. Nothing at all. Just like it just gone into a black box.
And he began to suspect that there was a desire, even at the highest level within Nissan, to kind of sweep these conflicts of interest under the rug.
Unfortunately for me, I think, you know, again, with hindsight, people must have thought that this is the nail that's sticking out, and we can't have this. Within 3 days of me submitting that to the board of directors, that letter to the independent board of directors, I was removed from the Ghosn Executive Conduct Matters. I was then told that I could not attend board meetings anymore. And up until that point, I had attended every single board meeting. I was then also told that after 8 years of being in Japan, I'd be going back to the UK. It eventually transpired that I'd be the VP of Projects and Transformation, managing a team of 3. So you can imagine what this feels like at this stage. Almost an arbitrary removal from Japan, where I've lived for 8 years, had 3 children there, my family has grown up, and we've been settled there, having a few months earlier been promoted to vice president at a global level, to being almost demoted.
So Pasi was essentially being reassigned to get him as far away from the internal investigation as possible, and also to a certain extent in retaliation to some of the issues that he brought up regarding the internal investigation and Harinada.
What happened to Rav Pasi can be seen as a series of corporate humiliations. I mean, first of all, his immediate responsibilities were taken away from him. Eventually, he lost, the coveted general counsel title. But it didn't stop there. Toward the end of his stay in Japan, Rav and his wife were convinced that they were being followed.
During that period, I'd noticed that whilst driving my car, I'd have other cars following me. First time I noticed this was around mid-March, and I was driving, I can't remember where I was going, but this grey van, small van, just literally started following me. And I noticed that there was somebody in the car taking pictures. And lo and behold, we were absolutely being followed either by people on foot or other individuals, 2 or 3, normally 2 burly men in a car, different cars at different times, following us around. They were following the family as well. And, given I'd seen the Nissan security department behave in a very, very egregious manner with others in terms of following and surveilling, I was very concerned as to what they were doing and who they were giving this information to. Because if they're giving this information to the authorities, you do think, why? What's going on here? I mean, this is just not normal behavior.
And this all culminated in a rather dramatic event in the middle of 2020.
Who are you people?
Where Nissan had hired a legal team and had obtained an unusual court order from the district court in Yokohama
to basically do a search of his home and seizure of his corporate laptop and phone and other documents.
If you don't let us in now, we have to break this key.
So it's a pretty extreme way to treat someone who had spent 16 years at the company.
These people have all come in. We don't really know who they are, apart from the fact that I've been shown a badge that says the Yokohama Court. And they're here to recover a laptop and a mobile phone. It was even more weird because I'd highlighted to the directors that certain Nissan executives were trying to recover this laptop and this phone whilst I was still in Japan. And I was very concerned because it had evidence on there that related to misconduct matters and other forms of inappropriate conduct. It was just another form of intimidation, another form of harassment, forcing me almost to leave the company and the country. Because once they'd retained and obtained these items, we were still followed, which, again, I just couldn't understand. What is the point of doing that? This isn't a car company. This is not the KGB.
I think it's fair to say that Rav Pasi didn't have full battlefield awareness of all the intrigue going on at Nissan. I mean, Harinata is interesting because he's both charismatic and charming, and one of the most brutal corporate infighters one could ever run across.
This is a confidential company email, right? You should not have this.
If he had fallen into line, he would probably still have his job at Nissan, be paid very well, and continued his work.
A career that he spent 16 years building at Nissan is irretrievably broken. It's been smashed to smithereens. He and his family paid a huge price, certainly. But in terms of being able to sleep at night, I think, he's come out ahead.
I highlighted issues to the highest levels of the company so that they could be dealt with appropriately by those in charge. There was no response to those, and there was retaliation against me. What's really profound, like absolutely profound, is that none of your colleagues, I mean people who you have known for years, forget it.
Yeah.
You're on your own.
Yeah.
And you got to be ready for that. You've got to be ready for that. If you take it on anyway.
This is the awful truth. There's always someone in the family that's pushing it.
This lady does not deserve to be taken advantage of, especially at your age with your own grandchild.
Yeah.
My grandma is having to sue them. I'm testifying against them. Nobody's talking. They're one floor below right now. I get afraid to go on the elevator. It's sad that it had to devolve to this.
It's like a soap opera to me.
It's a very sad thing.
It's a family feud. A family feud.
Here's a family that, on paper, you would think has the wealth that so many people seek, yet at the end of the day, it seemed to sort of rip everybody apart. My name's Tom Schoenberg. I'm a senior reporter here at Bloomberg News, cover financial enforcement. I was approached by someone close to the Schottenstein family and asked whether or not I would be interested in writing about Beverly Schottenstein and this case that she had against J.P. Morgan. And it was immediately clear that there was a great story here to be told. So I started just, assembling all sorts of documents that the family made available to me. That included a diary that Beverly had begun writing when she started having suspicions about what was actually going on with her money. Beverly obtained her wealth from the Schottenstein kind of retail empire that has at times included Big Lots, Value City, American Eagle Outfitters, DSW Shoes. Beverly's husband died, and at which point they sold off their portion of the company, bringing them an enormous amount of wealth at around 1990. Estimates of her wealth were around $90 million. She, for many years, had that pool of money being managed by outside advisors. Her grandsons in the late 2000s had both graduated and were becoming financial advisors. She gave them a little bit to work with, and over time, her grandson, Evan, became the trustee of her entire estate. Managing sort of family money is not a conflict. In fact, some ways in wealth management, it's kind of how you get your start. It's kind of the seed that you need to sort of get going in the business. But Beverly started having suspicions that something was wrong probably in around 2016.
Well, there were suspicious things, but taken separately without everyone talking about their own experiences, it was hard to really put it together.
She had written a check to her caretaker, Dawn, that bounced. So she went down to her local Chase branch to sort of find out what was going on. She wasn't getting paper statements in the mail, so she asked them to print out a number of her statements having to do with her checking account and her credit card account.
So we went to the bank and asked for the statements. And she got a whole year and going through all of them, page by page by page.
And it was there she saw all sorts of charges that she said she didn't authorize or didn't know about.
I was becoming very, very suspicious. I was starting to look in the money part, and that's what bothered me more when I saw that money was going, and I was not a big spender.
Around the same time, Dawn, she starts noticing Beverly's son, who lived in the condominium below her, came up with Evan with a shredder and started grabbing papers in her office area, including some with JP Morgan letterhead, and just started sitting at the kitchen table just shredding documents over and over.
Yeah, they came in one morning.
They used to do it in the back.
Through the back door, and they brought the shredder inside. And then they went in the drawers in the office and took out all the papers, and they started doing it. I was very suspicious because I know you don't go around and destroying papers.
Beverly said that they had done this many times before.
That's when she said to me, you know, Dawn, I'm going to write my feelings in this black book.
Diary.
And it's a diary, and she started writing. Each day she would write a little at a time.
Around the holidays of 2018, a package had arrived, a FedEx package, and in it were materials about a venture capital fund based out of the Cayman Islands. Dawn and some other family members take a look at this, and they see that Beverly is signed up for this fund to the tune of $5 million over the course of several years.
And that was really the beginning of it. That was sort of the tip of the iceberg when it became obvious that something was going on, that my grandmother really wasn't aware of this fund.
You know, Beverly started to panic. She got really upset and called, JP Morgan's headquarters in New York and asked for Jamie Dimon. She said she was told someone would call her back, but she says that never happened. She wrote a letter to Evan and Avi, and in there she laid out a number of things that were concerning her: unauthorized trading, the checking account. She had about $1 million worth of jewelry in a safe deposit box, and that her son Bobby had the key to that box, and that jewelry had gone missing. All this was kind of packaged in this, 5-page handwritten amendment to a will and trust.
There's such an evolving narrative about why the jewelry was taken. The only truth we really know is that the jewelry is gone. But why it happened, there have been a lot of different stories.
You just don't take your mother's wonderful things and hand it out.
And they emailed that note to JP Morgan to seize all activity on her account.
And it ended up setting off a firestorm after that. As soon as they got this email that there was a cease and desist and that she wanted to send her money and change brokerage firms, They were actually vacationing one floor below downstairs. They're there right now.
The next day, Beverly's in her place. The granddaughter's still in her place visiting. Dawn is there, and up comes Bobby kind of barging through the door. And he's screaming about what was sent to the JP Morgan. They're now investigating now. And he's furious, takes his mother and sort of puts her into a chair, gets pen and paper, and she says physically forced her to write a retraction letter.
They were pushing me around.
It was a scary time. I was really afraid too.
I had to take her to the doctor, and she did an x-ray because she was in so much pain.
The locks had to be changed. The phone number had to be changed. I really thought we were going to have to hire guards to be outside just for protection.
Oh, it was terrible.
Horrible scene.
Beverly brought her case before the Financial Industry Regulatory Authorities, usually known as FINRA. It took several months of hearings. She sees all sorts of transactions that's going on, hundreds of them that she claims that she never knew about, never authorized, but yet were logged in JP Morgan's files as having been direct requests from her. That included the sale of a large amount of Apple stock worth several $1 million, as well as all her stock in Big Lots. You know, over the course of their time with JP Morgan, Evan and Avi were making all sorts of trading on her account that was generating millions of dollars in commissions for themselves and the bank, yet she was not sort of getting any of the type of gains that you would expect sort of an $80 million account in a bullish market to be able to get. They issued a ruling entirely in her favor, finding that her grandsons, as well as JP Morgan, they were liable for violating their fiduciary duty, misrepresenting themselves, and they also found that the bank and her grandson, Evan, were liable for elder abuse. Evan and Avi, they were fired from JP Morgan. They issued an award of about $19 million. I reached out for comment, and JP Morgan emphasized that Evan and Avi were no longer with the firm and that their actions do not represent the sort of values of the bank. I reached out to Evan and Avi, heard back from their lawyer saying that, you know, they disagree with the law and the facts that FINRA kind of used to decide the case against them and are seeing if they can have it withdrawn. Her son, Bobby, wrote her a letter, said his sons weren't criminals, and he also admits to taking her jewelry. And he says he needed it to pay off some bad business debts he had.
They never once came up to say, I'm sorry.
If there had been an apology and some acceptance, and asking for forgiveness from my grandmother, I don't think we'd be in the position that we are now.
Since the piece came out, we've received dozens of messages from people, many of whom are telling their own sort of personal tales of, kind of financial advisors gone bad, or family members who got control of an estate and abused, those within. It seems that it's really resonated with a lot of people. I keep, hearing a lot of feedback about Beverly and how, a lot of people feel she did the right thing.
You're never too old to stand up for yourself and try to right an injustice. She was adamant that she wanted to stand up for herself, but at the end of the day, they did wrong.
It's a painful life lesson. Beverly taught them that you don't mess with grandma.
On April 20th, oil markets did something they never had before, and they crashed, went into negative territory and closed the day at minus $40. Meanwhile, in a place called Thaden Boyce in Essex. A group of 9 traders, led by a guy called Cuddles, made $660 million over the course of a couple of hours.
The price of oil has collapsed to a record low.
We've never really seen anything like it. WTI this morning down more than 35%.
People maybe wouldn't have been so surprised if the oil price had fallen to zero, but the oil price went to minus 38. It went far lower than anyone had expected. And so lots of people in the market were saying, well, hang on, something else is going on here.
A couple of months later, I started to get wind through a kind of network of sources that a tiny firm in the outskirts of London had made a huge amount of money that day and potentially had some part to play in what happened.
The information we got was that 9 traders at Vega Capital London had made in the region of $660 million in one day. As a group, I think they made as much money in one day as Apple makes from its international sales in one day. I mean, it's an insane sum of money.
Did they pull off a fantastic trade? Did they predict the way the market was moving and get it absolutely right? Or was there something else going on, and had they actually done something that breached market rules in a bid to sort of push the market? And that investigation is ongoing. So Paul Commins is a trader who cut his teeth in the pits in the 80s and 90s. When everyone had a nickname, his was Cuddles. If you can imagine, that was a very sort of cutthroat type of world where people are doing, hundreds of thousands and millions of dollars trades by shouting at each other, giving hand signals, and then sort of scrawling on scraps of paper.
The culture of the trading pits in London was very influenced by the working class guys who became traders there. They weren't like the city bankers that had gone before them. They weren't usually Oxford or Cambridge. They didn't wear Savile Row suits. They were ordinary working guys who happened to have a talent for trading. And a lot of them came from Essex.
I think it was 400 traders in the pits, and Cuddles in his oil and gas pit was described to us as amongst the top 3. In amongst that, was very successful and made very large amounts of money as a young man. But inevitably, mechanization and the arrival of electronic markets was the kind of death knell for the pits. And in 2005, the IPE closed down.
And when the pits shut down, a lot of the traders who worked there lost their jobs or quit or went to work for financial institutions. But Paul Commins decided to start his own trading collective out in Essex.
Some of them are ex-pit guys, cut from the same cloth as him. Lots of them are actually sort of in their 20s, and they're his, drinking buddy's son, or they're his own kids' friends from football. They're young lads, hungry and ambitious, and he brings them into the fold. And fairly shortly, he's got, maybe a dozen or so traders that they're independent, let's be clear, but they're all part of this collective.
Yeah, I'll let Liam deal with Essex.
I am from Essex, so I feel like I'm free to get into this.
Sweet, as they say.
If you were to ask someone in Britain how they would imagine a kind of Essex person, they would see someone who's maybe slightly flamboyant, with a sort of Cockney accent, a sort of Guy Ritchie-style accent. Not afraid to splash the cash, but it's probably pretty bright and has done well for themselves.
Don't even make sense, does it?
But, these guys, they drove around very nice Rolls Royces and Bentleys. They went to places like Marbella on holiday.
Thaden Boyce is a very wealthy place. You have to have considerable income to be able to afford to live in that village. It's a really nice place to live, and it's 20 minutes tube ride away from the city.
Earlier in the summer, we have this lead, which is that there's this tiny firm called Vega Capital London, and they were the biggest winners from the biggest oil crash in history. Anyone that covers markets is going to be surprised about that. You're thinking your BPs of the world or your Glencores, but there's this tiny firm.
And one of the big challenges that we had was actually finding out who worked with Vega Capital. It wasn't immediately obvious, and at first we had absolutely no idea. If you go to the Vega Capital website, it says it's under construction. If you do basic online searching, it's very difficult to find anyone who's publicly connected to the company.
So inevitably, we're incredibly curious at this point. Like, who the hell are these people?
The more reporting we did, the more it became clear that this group were connected socially as well as professionally. They went to weddings together, they played golf together, they would go on holiday together. We found out that a number of them were members of the West Ham Supporters Club in London. A few of them started companies together, so you could see all the connections between them and start to see a distinct group emerging.
And it really just was this kind of shock that, you know, this wasn't just like a hedge fund or a firm you'd never heard of. This was actually a group of buddies who all had the same experience on this day and had all made a huge amount of money. So if you're an oil trader, there's a number of different ways you can trade, and probably the most popular is WTI futures contracts.
And it's basically a contract that says, I'm going to buy 1,000 barrels of oil from you at this point in the future, or I'm going to sell 1,000 barrels of oil to you at this point in the future.
It's actually just a financial contract to gamble on to predict whether oil is going to go up or down.
On the 20th of April in Essex, there had been signals for a while that this was going to be an exceptional day in oil markets. And we know that some of them arose early and started their trading in the early hours of the morning while it was still dark outside.
Essentially what they were doing is buying contracts that gave them an obligation to buy oil at whatever the price ended up at 2:30 p.m. So they're basically placing a bet that oil was going to fall throughout the day.
But they're simultaneously selling lots of oil as well. And whether they make a profit and how much profit they make is the difference between what they buy the oil for and what they sell the oil for. Now, of course, we now know throughout April 20th, the price dropped and dropped.
So this is going very well for them. You know, they are committed to selling oil at these prices, and the prices are continuing to fall, which means they're going to be able to offset it and buy oil at cheaper at the end of the day. Now, once it gets to kind of 1:30, 2 p.m., that's when things start to get really interesting. Suddenly there's a kind of influx of buyers and sellers, you know, as desperation increases in the market and trading volumes go up. Now at 2:08 p.m. exactly, something bizarre and unprecedented happened, which is that oil passes into negative territory.
And it fell to a record level of minus $38.
We've never seen anything like it, period, in terms of the contraction of the global economy.
That huge gulf between what they were buying the oil for and what they were selling it for enabled them to make more money than they ever thought possible.
So their profit was the difference between minus 37 and all of these positive numbers on every contract they sold.
The price of crude briefly hit minus $37 a barrel. For one group of traders operating from a small office, it was a very, very profitable day.
It's important to remember this had never happened before in the history of oil trading. No one could have predicted it.
I can't think of another example of where you enter a trade and you get paid on both sides. You get paid both to sell and to buy. It's unthinkable.
One thing we know about the Cuddles Trading Arcade is that they were very comfortable taking large risks. And, you have to be clear, this was a large risk.
Yeah, we spoke to oil traders, both people that know these guys and people that don't, and they all say that this is, incredibly risky.
And that's actually what stops a lot of oil traders doing trading like this. They simply aren't willing to stomach the risk. But Cuddles and his friends were.
So when the kind of final calculations came down, the group of the 9 most profitable traders made $660 million or thereabouts between them. I mean, if you can imagine, I think 3 or 4 of them made in excess of 100 million each.
One of the astonishing things about this trade is that 2 of the individuals who made more than $100 million in a single day were in their 20s. One of them was 22 years old. Only a few years earlier, he'd been posting on his social media about doing teenage stuff with his mates in town and going to see girls and rap music. And here he is a few years later making $100 million in a single day's trading. When me and Liam discovered that, we couldn't believe it. We couldn't believe what we were seeing. Oil trading is a zero-sum game. Anytime you're making money as an oil trader, someone else is losing it.
Amongst the biggest losers were the investors in this Chinese fund, Crude Oil Treasure Fund. There were thousands of them, and they lost everything.
Lots of people had put their savings into oil funds. They lost money that day. Big banks and brokers who sort of stand in the middle of trading parties, they lost money that day.
And another interesting thing is that oil-producing countries like Kuwait or Canada, they sell oil as an average of the WTI closing price over the preceding month. So the fact that one of those numbers in that average was minus 37 meant, if you can imagine, countries like Saudi Arabia and Kuwait potentially lost a couple of dollars on every single barrel of oil they sold that month.
Vega Capital's traders made such an extraordinary sum of money that it was inevitable there would be some scrutiny of what they did. But it wasn't just the sums of money they made. In the vital half an hour before the settlement price was set, they were by far the biggest sellers of oil futures in the market, which is an incredible thing to think about when you consider that the other participants in that oil market are going to be the world's biggest banks, oil majors, BP and Shell, and here you have a group of 9 guys in Essex who are having this significant influence over a global market for oil.
I mean, I think you have to assume that if these guys had made $7 million or $10 million, they probably would be celebrating in Essex right now. But the fact that they made closer to $700 million has meant that they are facing understandable scrutiny.
We wrote individually to all the Vega traders who did exceptionally well that day, and we got a letter in response from a law firm representing the group. The law firm was at pains to point out, number one, that they haven't been accused of any wrongdoing, that they all traded independently and separately, and they'd basically all made up their own minds that this was what was going to happen in oil markets based on publicly available knowledge, and decided to execute this trade.
What I love about these stories is there's a real variance of opinion, and some people will look at what happened and think that must be dodgy. They all traded at the end of the day. They all made a huge amount of money while all these people lost. That's shocking. But lots of people say these guys are at acute disadvantage. They're in a market that's inhabited by, huge technology-driven funds and firms and oil giants that have got all the advantages in the world, and when you get a bunch of Essex geezers who essentially beat the market and find a way to make a huge amount of money, they should get a pat on the back, really, because that's the dream. Since this happened, a lot of the guys have stopped trading the monthly settlements that they'd done so well at in the past. Several of them have set up new companies. They've essentially gone very quiet. Any kind of social media presence they had is kind of closed down. By all accounts, they're, waiting this out.
It's certainly too early to try and predict how the regulatory investigations are going to pan out. We just don't know. There's a number of potential outcomes for these guys. Potential punishments if there are any findings of manipulation against Vega or anyone affiliated with it might be you could be fined, you could be banned from trading, and in the most extreme cases there have even been criminal prosecutions in the past of people who have been found to have been manipulating the settlement and misconduct related to trade at settlement. There are other outcomes too. One obvious one is going to be that they're able to walk away from this life-changing trade with all the money that they made and celebrated as heroes in the trading community. That they'll go down as legends.
It's very important, given the nature of the climate crisis right now, for the general public to have an understanding of what progress is or is not actually happening. And I think many readers right now, they'll see these hundreds and hundreds of companies making these big, bold climate claims. And they would be forgiven to think that we're well on our way to meeting the emission reduction trajectory we need to be on. And the reality of the matter is we're just not on that trajectory. And a key reason for this sort of disconnect is the use of offsets that aren't doing what they claim to be doing.
We have a massive potential for sort of willful blindness. We can convince ourselves of things regardless of what the facts are. And so that's what tends to happen in these cases. It's not that anybody is setting out to commit climate fraud. They sort of walk themselves into a situation and they convince themselves of one thing, and that allows them to convince themselves of another thing. But at the end of the day, they're doing something that makes no sense at all.
My name is Ben Elgin. I wrote the story about how the billion-dollar market for carbon offsets is setting back the fight against climate change. So one of the challenges in reporting on carbon offsets and trying to figure out what's going on is really finding good experts who have been steeped in this marketplace and are willing to candidly talk about it. One of the best people for this is a fellow named Mark Trexler, and I've been talking to him for more than a decade.
My name is Mark Trexler. I've worked in climate change for the last 30 years. I was actually hired by the World Resources Institute in Washington to work on the first carbon offset project in 1988. In terms of defining a carbon offset, one of the beauties, so to speak, of greenhouse gases, sort of the silver lining of greenhouse gases, when you put up a molecule of CO2 into the atmosphere, it can be anywhere in the planet in 7 days. And therefore, if there's an option to reduce emissions on the other side of the planet, and you can do that very cheaply as compared to doing it in your factory, for example, then why not pay that person, that factory on the other side of the planet to reduce their emissions? Then you are, in a sense, offsetting your emissions, and the atmosphere doesn't really see your emissions anymore.
So carbon offsets have been around for quite some time, and they were actually key with these international climate agreements, such as the Kyoto Protocol, which mandated the wealthiest countries reduce their greenhouse gas emissions.
The treaty was signed on the 11th of December, 1997.
Decided. The business community in general saw carbon offsets as a huge opportunity to comply with whatever policies and measures might be coming down the pike on climate change much more cost effectively.
We've seen a huge surge in companies making big proclamations about how they're going carbon neutral or zeroing out all of their carbon emissions.
We're going to reduce our carbon footprint to net zero.
Unilever is committing to net zero emissions.
We can achieve a net zero emissions world.
We began looking at these corporate claims of dramatically reduced emissions, and we noticed so many of these companies were using carbon offsets to achieve these aims. And as we began to look at the carbon offset projects themselves, what we found is that the environmental benefits claimed by these companies are not actually what they seem to be. And as we sort of saw and spotted a number of these very aggressive carbon offset projects, which appeared to be generating inflated credits or bogus credits, we saw a number of them were associated with the Nature Conservancy. This surprised us. The Nature Conservancy is the world's biggest environmental group. They have about $1 billion a year in revenues, and they've been around for 7 decades. They've preserved about 125 million acres of land, and they've done so many good works over the years, and they've been very strong in terms of working with corporate partners. The Nature Conservancy has taken a different approach, a very pragmatic and pro-business approach. They will not go out and criticize a big polluter, but they're very happy to work with them. Some might say that, well, that's selling out, but others would say, and those at the Nature Conservancy would say, these companies have deep pockets. They can help fund important preservation work, and we have absolutely no problem working with them on this stuff. So companies are very warm, and they've partnered with the Nature Conservancy for many years. And yeah, it definitely lends a sheen of credibility to these projects.
Here's 20 new reasons to visit Disney World this year. 1, 2,
if you look at, for instance, Disney, that's a sprawling company with theme parks and cruise lines that burn up diesel fuel. They have office buildings and television studios that consume electricity. So these companies are trying to make major reductions in their carbon footprints, but it's very difficult to change these fundamental ways their businesses operate. So Disney has been a big buyer of carbon offsets that are orchestrated by the Nature Conservancy. One of the projects that they buy from is called Pennsylvania Ridges. And that's a plot of land. Most of the land is actually about a 3-hour drive outside of Philadelphia. Interestingly, this land, 3,000 of these acres, was actually acquired by the Nature Conservancy in the late 1990s. This land was imminently threatened. There was a pending logging contract on this land. So they do what they've done so well for all of these years, which is they go out, they raise money from local philanthropists, and they go buy this land to protect it from developers and loggers. And at the time, according to an archived version of the Nature Conservancy's website, when they were proudly announcing this deal, they said, these threats have been abated because of this acquisition by the Nature Conservancy. So it's really interesting now, fast forward 2 decades to earlier this year when they put forward this carbon project. And if you look through it, this land is a key part of that carbon project. And what they're now saying is this land is now, once again, imminently threatened. 72% of the trees are going to be cut within 5 years. Now, this is just astounding because this land is owned by the Nature Conservancy. They do not clear-cut land that they've bought through philanthropic donations. So this scenario that they've put forward to get carbon revenues is not really plausible. And what that means is when you have Disney coming in and buying these credits, when it eventually lowers its carbon footprint because of these credits, well, that won't be a credible or truthful claim by Disney. So this is an organization that truly understands the threat of the issue of climate change and is wanting to do its part to address this. However, in this situation, it just appears their drive, which they've had for decades, to increase the amount of revenues that it can use for land preservation work. Nature Conservancy and many others see that carbon credits as a pot of money that they can tap into to further their own benevolent aims. But unfortunately, what this has resulted in is claims of climate progress that just aren't really happening. So the Nature Conservancy defends vigorously these deals, and they and others will say, look, our projects are just following the rules that these registries set up. So some would also put some of the blame on the registries themselves because they're setting up the rules which allow these vapid projects to get up and sold. So we've reached out to all of the companies we mentioned in this story, including Disney. They didn't want to be interviewed for this story, but they all told us that, look, we have to rely on the experts out there, and those experts, they say, are these carbon registries that have been set up. Most of these Nature Conservancy deals are set up and sold on this exchange. It's called the American Carbon Registry. Now, it's the oldest of these registries that allow voluntary carbon credits to be sold. They've been around since 1996. What these offset registries do is they set up rules, and any carbon offset project has to follow those rules. But there's this tension that's always there. If the rules are too strict, then it's going to be very hard for carbon offset projects to get up and running. So there's this balance going on where the registries want rules that attract projects, but they don't want it to be so strict where it will disincentivize projects from getting listed.
One of the challenges with designing carbon offset systems is that there are normally two people at the table. You have buyers and you have sellers. And to some extent, you have policymakers, but you know, the buyers and the sellers are really the ones with the expertise, with the incentive to really participate hard, make a lot of things happen. And the challenge there is that both of them sort of want the same thing. or they're both happy with the same thing. They're happy with low-cost offsets and a lot of them because that works for their business model. You end up, though, with nobody really representing the atmosphere, so to speak. Nobody's really representing the climate in those discussions. And so the policies end up biasing the whole system, and you end up in sort of a race to the bottom, and that's what we've seen happen. When it comes specifically to the topic of carbon offsets, I am a fan of carbon offsets in the sense that they can help mitigate climate change. They absolutely can. But if we're not going to do it correctly in a way that actually does help mitigate climate change, then it's nothing but a distraction. And after 30 years, you have to start wondering, is it really just a distraction? And that's really unfortunate, but that's where we are. Ultimately, what needs to happen is systemic change. We're sort of nibbling around the edges with some of these different things. We need to change how we produce energy. We need to change how we transport ourselves. We need to change what and how we eat. We need systemic change associated with transitioning to a low carbon economy. A lot of what we're doing today is not promoting systemic change. It's sort of trying to stick your thumb in the dike to preserve the current system. And at the end of the day, that can't really work.
The Hyperloop. There's a good chance you've heard the name by now.
This is the Hyperloop system. It can take people hundreds of miles in minutes.
The Hyperloop, a series of tubes that would transport people in pods at ultra-high speeds over long distances.
This is a remarkable new form of transportation that can whisk people from city to city in a flash.
29 minutes from New York to D.C., 30 minutes from L.A. to San Francisco.
For years, we've been seeing these futuristic, utopian renderings of some cross between a spaceship and a monorail. But lately, the Hyperloop is becoming much more real.
Yes! It was surreal to be even sitting inside a Hyperloop, and just even more incredible to actually be like riding down a track in something that was nothing more than a crazy idea 6 years before.
Companies all around the world have been developing and testing the technology needed to propel passengers at speeds of over 1,000 kilometers per hour. But for many, speed is only the first step to unlocking the full transformational effects of a new mode of transportation.
Fast is what we just sort of take for granted in the Hyperloop world. It's the network effects that really deliver the benefit. And that opens up a completely different scale of economic opportunity.
We've got planes, trains, automobiles, and boats for getting around Earth. But what if there was a fifth mode? And I have a name for it, which is called the Hyperloop.
The Hyperloop?
Hyperloop, yeah.
In 2013, while riding high on the growing success of Tesla and SpaceX, entrepreneur Elon Musk released a white paper outlining the basic framework of the technology he called Hyperloop. The basic idea goes a little something like this. A tube reduces the air pressure to a near vacuum-like environment. A Hyperloop pod is then suspended in the tube, usually by magnetic levitation. The whole pod can then be propelled forward. Because there's no traditional friction sources like air resistance or rolling friction that would push back against the pod, the Hyperloop is able to move at incredibly high speeds and do so fairly efficiently. Despite its futuristic name, however, the general concept behind Hyperloop is actually pretty old. In fact, New York City's first attempt at an underground public transit system in the 1870s was based on a similar principle. The pneumatic transit system was short-lived, however, only stretching one block and topping out at a rather leisurely 10 miles per hour. While Elon would make some 21st century improvements to this concept and bestow a very 21st century name, he wouldn't end up pursuing the technology itself, instead electing to focus his efforts on something a little bit deeper, literally digging the requisite tunnels via his boring company. It would take another billionaire industrialist who dabbles in spaceflight. No, wait, not that one. Yeah, that's the one. After Richard Branson would make a large investment in the company Hyperloop One, it would be renamed to Virgin Hyperloop.
What we've always been trying to do as a company is show that this technology could work, that it could be made safe, and that ultimately it's something that's happening in the next couple of years, not the next 20 years.
Josh Geigel is the co-founder and CEO of Virgin Hyperloop. In a familiar tech startup story, he's seen the project go from a garage to a large-scale testing facility outside of Las Vegas.
So we started building the first kind of Hyperloop system in 2016. We've done a lot of work, about 500 tests that we've done on that over the last 5 years. And what we realized that we need to do is take that technology, show that it can be commercial, so drive the cost down, improve the efficiency, improve the performance. But the key thing is actually making it approachable and safe for individuals.
In order to do that, Josh, along with Virgin's head of passenger experience, Sarah Lucian, bravely volunteered to take the inaugural ride.
What her and I were realizing is we're the first two people sitting in a Hyperloop. The only type of people that have gone through this environment are in spacesuits, and there we are in just normal clothes because of the system, the safety of what we've designed.
3, 2, 1, launch.
And then once we started going, you felt a bit of acceleration. We accelerated a little bit harder than we would in commercial. It'd be like a sports car. Yes. We got to about 108 miles an hour on that test. And it's a short run. It's about 500 yards or so, and came to a stop.
The test, lasting only about 20 seconds and covering only a quarter of a mile at just over 100 miles per hour, is a long way away from a true functioning Hyperloop. But as for optics, it's a crucial step for the future of funding.
The number one question we got from investors or from project proponents or just people in general was is a Hyperloop safe? And what better way to show something is safe than by actually getting people on it?
But convincing investors and governments that would likely be fronting some of the construction costs for an unproven technology is no easy task. First and foremost is the question of safety.
Most people don't know how an airplane works, but yet they get on an airplane. They get on an airplane because, it's faster than driving. And most importantly, they've probably gotten off of one before. They've seen someone get off of one before. And so what we set out to do was actually show that Hyperloop could be safe with two normal people, not astronauts, not adrenaline junkies or test pilots or anything like that. Two normal people getting on a Hyperloop, and then most importantly, those two people getting off.
But beyond safety concerns, constructing Hyperloops will undoubtedly require a significant capital investment to the estimated tune of around $60 million per kilometer of track. So a track from San Francisco to Los Angeles, for example, is likely to come with a price tag over $10 billion. And before large governments are willing to come in and front those costs, investors who are funding Hyperloop development must accept it as a long-term mixture of technology and infrastructure investing.
Investors that are used to short returns because you're developing apps or something to that effect, those aren't the investors that really get excited about Hyperloop. What you start to see is the people that are looking at platform technologies, right? So this idea that because the smartphone existed, Uber could exist, right? So who are the Vanderbilts of this century? And that's the part where you're going to get a lot more no's than yeses. But those people that have the ability, the fortitude to stick it out, to see the game-changing platform here, those are the people that we're looking for. And since we've done that passenger test, there has been a lot of interest that's really, oh, this is a lot sooner than I thought.
Envisioning the ripple effects of what Hyperloop could achieve, though, is fairly challenging at this stage of development. It's fast, yes, but for point-to-point travel, traditional maglev trains can move pretty fast as well. And outside of China, South Korea, and Japan, even those haven't seen much adoption elsewhere due to the high costs and questionable profitability. The Shanghai line in China, for example, loses around $100 million every year. Hyperloop companies, however, believe they can offer something different than traditional railway lines.
My name's Alan James, and as far as I know, I'm the only guy on the planet who's written a government-level business case for 300 kmh conventional high-speed rail, 500 kmh maglev, and 1,000 kmh Hyperloop. It's fundamentally about moving people from where they are to where they want to go, when they want to make those journeys, and doing it in much smaller numbers. So pod designs for Hyperloop range from 12 to 28 seats, typically. Why are they small? It's because small enables the network to operate flexibly. And a great example of that is the east-west strategic route across the north of England, from Liverpool to Manchester to Leeds. So to get from Liverpool via Manchester to Leeds by train is just short of 2 hours today. It'll probably take you 2 hours driving as well in average traffic conditions. Net result is those three city regions remain three separate entities: Liverpool, Manchester, Leeds. There's very little commuting traffic between those urban areas. Hyperloop absolutely changes that from the ground up. Liverpool to Manchester is a 5 or 6 minute journey. Manchester to Leeds is also a 5 or 6 minute journey. What that effectively does is create a single super city economy.
In this vision, the Hyperloop acts a little more like a highway, where pods have fixed destinations and don't need to stop along the way. Meaning you can travel on a Hyperloop network from, say, Liverpool to Leeds, while the pod behind you travels from Liverpool to Manchester. And if that metro Hyperloop network is connected to other networks from the same location, you could travel from Liverpool to Paris or Liverpool to Amsterdam, all without making a single stop.
For passengers, for business, for leisure, that is utterly transformational. For high-value freight and logistics, it's equally transformational. But critically, if you do a Hyperloop network at scale, you begin to deliver massively significant carbon savings too.
A multi-regional Hyperloop network could become a replacement for both short-haul passenger and cargo flights and traditional ground transportation, both of which are significant carbon producers.
One Hyperloop-connected distribution hub, perhaps at an airport that is predominantly used for international air freight, replacing maybe 10, 12, 15 distributed road hubs. It takes a lot of polluting and inefficient truck haulage off the roads. That itself means roads gain extra capacity.
Hyperloops will still need to use electricity to both move pods and maintain the near-vacuum environment in the tube. Proponents of the technology believe that this can be done by using renewable sources, including a combination of solar panels and battery technology that could be used along the Hyperloop itself. But even with all multipliers of time and carbon emission savings that a Hyperloop network may provide, the investment capital required to actually build such a network becomes even more economically and politically daunting.
Committing doesn't mean spending billions on day one. Committing means, how do we phase it?
One company in the Netherlands is working to develop that technology, and perhaps more importantly, the international coalition needed to make the Hyperloop network a reality.
So we are here in Europe's first full-scale Hyperloop test facility, where we can already prove every conceptual technology of the Hyperloop.
This is Tim Houter, a co-founder and CEO of Hart Hyperloop, headquartered in the city of Delft. And while this testing tube might not seem as large as others, inside is a key technology to create the on- and off-ramp type infrastructure of a Hyperloop network. That is, a lane switch.
That's something we can already test here. You can actually see it here, that the track is diverging from one track into two. That makes it possible to eventually split up the Hyperloop track in two sections. And in that sense, you can create a complete Hyperloop network. That in the end will make it possible to travel, for example, over a whole continent. Take Europe, for example, with the same ease as you can now travel with a metro in a city.
The nice thing about this magnetic levitation system that we've developed is that there's absolutely zero moving components in the track. So, for example, if you have to do a lane switch, all you do is that the tube basically splits up, and statically the tracks also split up. And whenever the vehicle enters a switch, it either pulls itself to the right with its magnets, or it pulls itself to the left with its magnets.
Lane switching on traditional rail requires the physical movement of the rail. Even modern magnetic levitation tracks use lane switching techniques in order to transfer trains from one track to another.
And this is a very crucial element, because this is the thing that limits the capacity and, in the end, the usefulness of the rail network. Because the moment that a track is switching, that means that at that moment you are creating an unsafe environment for the trains behind it. So you need a lot of space between trains. But in a Hyperloop, because you have no moving components in the track, all the vehicles can be much closer to each other. You can achieve a very high frequency and basically have your vehicles moving and merging in and out of the network very much like a highway.
For now, though, Hart's physical testing has been limited by the size of their tube. Because the test track is only 30 meters long, they haven't tested this lane switch at speeds greater than 20 kilometers per hour. However, the company is working to build a new test site where it plans to increase that testing speed to 300 kilometers per hour.
We're now in a phase where we have proven most of the most important technologies in the test facilities that we already have. And we have also demonstrated the viability and the feasibility of a network. If you look at all the subsystems that it consists of, most of those are proven systems, already demonstrated in lab conditions. So we don't really believe that the technology itself is going to be the biggest challenge.
Because for all Hyperloop companies out there, actually building a Hyperloop system requires more than just a good product.
We're talking about the safety aspects, we're talking about integration into the environment, we're talking about the social aspects. Do people feel comfortable traveling in such a system? So it's about all these different aspects. And the complexity is really getting all the different stakeholders that are relevant and that do need to contribute to bring this to market, to get them all following the same roadmap.
In order to help build this coalition of private and public interest in Hyperloop development, Hart in 2018 partnered with other Hyperloop companies from Europe and Canada. The goal was to define, establish, and standardize the framework to regulate Hyperloop systems.
Right now we are working with all the Hyperloop developers together in setting up the first, let's say, structure for starting the standards drafting.
One of the most important goals for HART is interoperability, which is essentially making sure the different systems can communicate with each other.
Interoperability is so important because what we want to achieve is actually have this seamless travel experience. So you don't want to end up, for example, going from Madrid to Paris and then switching because you need to use a different technology to get, for example, to Amsterdam.
The idea being that as companies around Europe create the first commercial Hyperloop tracks between individual cities, one day those can all be connected to a larger network.
Everyone that believes that Hyperloop is a future transport system also realizes that there is a need to have this network because that's where Hyperloop thrives.
Hyperloop is such a huge project. It's definitely not something that you can do on your own or as a single company. So you need to do it with a lot of other companies. You need to have the governments. And I think in that sense, the biggest challenge that we've encountered is to really get all the required parties together to take the steps in development and in commercial implementation.
HART's next plan is to build the European Hyperloop Center, an open testing facility which will include a 2.6-kilometer test track. And the company hopes to test travel speeds there at up to 700 kilometers per hour. Virgin Hyperloop is also racing to construct the first commercial Hyperloop route, with projects in various states of development in India, Saudi Arabia, and the United States. Recently, the company announced plans to build a Hyperloop certification center in West Virginia, which will include a 6-mile-long test track. Proving the technology here will be crucial if Hyperloop networks can find a home among infrastructure investments that the Biden administration hopes to make.
The idea that there's multiple Hyperloop companies, I think, is a redeeming aspect in the business. People really want to see something happen, so having multiple people move forward is good for that.
I was struck when Josh and Sarah rode the pod. 2 or 3 of the major outlets used the phrase, "We now have a new mode of transport." And although all of that technology had existed before those 2 human beings rode it, it was the moment at which those 2 human beings traveled that short distance down the tube that in popular imagination, Hyperloop became a mode of transport.
The metaphor I use with my team is that, the Wright brothers were first, but none of us fly on Wright Brothers Airlines anymore. If you don't continue to innovate, you're not going to be around, and so we'll continue to be at the forefront of building Hyperloop.
Back in 2013, Elon had an idea. I think the difference now in 2021 is some brilliant engineers have spent real time grinding out the details. And I thoroughly expect the next 3 to 5 years to be decisive.
how hydrogen can transform our energy usage. We'll look at why the universe's most abundant element could be a game changer in the climate revolution.
Hydrogen technologies are not new. They are used in other sectors. We use them in space, on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes.
From iron ore to green hydrogen, one of Australia's richest men tells us about his pivot to sustainable energy.
Let's take action. It's practical, it's implementable. Let's do it now.
Plus, the hydrogen revolution. We'll speak with the CEO of Italian utilities firm Snam about his new book and how green hydrogen could be competitive within 5 years.
Costs are coming down and people are waking up to the fact that it's the only way to decarbonize certain sectors.
From Bloomberg's global headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. It's a new year, so here at Bloomberg Green, we're highlighting new solutions in the fight against climate change. And one of those is as old as the universe itself, hydrogen. It's the simplest element around, but could well be a game changer when it comes to turning around our dependence on fossil fuels. Today, hydrogen is used in the chemicals industry to produce petroleum products. It's also starting to be used in steel production, an industry under a lot of pressure to decarbonize. But it has far more uses as well, from powering cars to heating our homes. And Bloomberg New Energy Finance sees a seismic shift in the sector in the next 10 years as green hydrogen squeezes out dirtier alternatives. So-called gray hydrogen dominates today. But as renewable electricity gets cheaper and more accessible, so will green hydrogen. In this week's edition of Bloomberg Green, we'll explore what this push into hydrogen means for tackling climate change. We'll hear from Australian billionaire Twiggy Forrest about his pivot from iron ore to hydrogen, and we'll also speak with the CEO of Italian utility company Snam about his book, The Hydrogen Revolution. But first, what are we using hydrogen for? And why does it actually matter? Christine Lee Edwards explains.
Hydrogen, the most plentiful element in the universe. On Earth, we find it mostly bonded to oxygen in the form of water, or in other gases known as hydrocarbons. Hydrogen gas, H2, burns hot and clean, making it an attractive tool in the race to net zero. But isolating hydrogen from other elements is no easy task. Today, the cheapest way to do this is via chemical processes that break up natural gas. This releases a lot of carbon dioxide. Another method is to use electricity to split water molecules in a process called electrolysis. Although there is no carbon byproduct, a lot of electricity is needed. And if this power comes from burning coal or gas, it negates the zero emissions goals of using hydrogen to begin with. Hydrogen produced in this way, powered by fossil fuels, is called gray hydrogen. If carbon capture and storage is used together with fossil fuels, then it becomes blue hydrogen. If nuclear power is used, it's called pink. And finally, green hydrogen is when it's produced via electrolysis and powered from renewable sources. This method is considered emissions-free. It's predicted that by the early 2030s, H2 made from renewables will be cheaper than that made from fossil fuels. But that hinges on the cost of electrolysis declining, which will be achieved through larger projects and an expansion of manufacturing. To be clear, vast amounts of H2 are already used today. Global production in 2018 totaled 117 million metric tons. This hydrogen is mostly used for its chemical properties, not as a source of energy, and very little of it is clean. Some sectors like steel could start using hydrogen for these chemical properties, replacing coal. Industries like cement and glass may also use hydrogen as a source of heat. Another advantage is its energy storage potential. It can be stored over long periods of time and used when more power needs to be added to the grid. It also could hold an advantage over batteries in heavy transport and shipping. The promise of hydrogen for energy has been around since at least 1874, when Jules Verne wrote about it in his book, The Mysterious Island. But the future of hydrogen will depend on policy. Countries with net zero targets, carbon pricing, and hydrogen strategies with investment mechanisms are likely to see the highest H2 demand.
That was Bloomberg's Christine Lee Edwards explaining what hydrogen means for the energy transition. But how are businesses approaching the sector? Well, one of Australia's richest men is making a big play into hydrogen. Andrew Forrest, better known as Twiggy, made his fortune from iron ore, being the chairman, former CEO, and major shareholder in Fortescue Metals, one of the world's biggest miners. But after having made over $10 billion in profit from the metal in the last fiscal year, Twiggy wants to transform Fortescue into a clean energy company. He's been scouring the planet in search of investment opportunities in hydrogen and renewables. The firm plans to allocate up to 10% of its annual profits for green energy investments and is exploring projects across the globe, from Indonesia to Argentina. Francine Lacqua caught up with Twiggy Forrest.
There's only one type of clean hydrogen, all the rest is dirty.
Yeah.
That is green. If you just say green hydrogen is clean, the rest is dirty, then you've actually nailed it. And, you know, anyone else who produces any other rubbish, any other argument, just look them there and say, why is global warming accelerating if anything you're saying is true? And then you'll know, actually, it's greenwashing.
Yeah, but there's a lot of greenwashing because I keep on being told it's a transition. We can't just, make the transition at a click of a finger. So what are we doing wrong? What can we do better?
I don't remember the personal computer having to transition the typewriter. I really don't remember that. I don't remember the smartphone having to transition the pocket calculator and the old landline. You know, its transition line is complete rubbish. The lie got put to it 2 days ago when JCB, a really loved British company, every right for the country to be proud of JCB, and Fortescue, holding a bit of a similar reputation, fantastic track record, everyone's been super well from Fortescue, huge balance sheet, super strong. When those two companies got together and agreed a $7 to $9 billion agreement per annum, right, then that's a real wake-up call to say, hang on, green hydrogen is obviously commercial now. You know, every other form of fossil fuel hydrogen, you know, it can compete with it on price, it can probably lose on price, but what we know, it is cooking the planet. And only green hydrogen, zero methane, zero carbon in the supply chain. Don't worry about the molecules in the supply chain.
But at the moment, we're not even phasing out coal, if you look at the G20 communique. So we have a long way to go to talk about only using green hydrogen.
Yeah, so look, I have a call, which I'd like to make now, that the world should not fund any more coal-fired power stations, coal mining projects, ever. We should wind them down as quickly as possible because they are cooking the planet just like grey and blue hydrogen is cooking the planet.
Yeah.
You know, hydrogen, which is not made from renewable electricity, is releasing 10 to 16 times more carbon, let alone the methane, which is worse, than it is hydrogen. So we've just got to stop doing things which are self-harming under the guise of greenwashing.
So why are leaders so slow? Even if you look at the appetite for ESG investments, they're growing exponentially, so are emissions. So where are we allocating capital?
Okay, so take the recent G20. There's probably a reason why there wasn't strong action coming out of the G20 because people were not aware that major transactions between large companies were taking place now on green hydrogen. That actually this pollution-free all the way to the supply chain fuel is now being transacted at multi-billion-dollar scale. If they'd known that, I don't believe any sovereign leader or any energy minister or climate change minister could not take ultra seriously that green hydrogen is now here to stay. It's broken through. History has been made. It will never go back.
Okay, what is the one thing that you would tell leaders today and business leaders? How do we transition faster than what we are now because we're at real risk of missing our targets?
Oh, so that's really simple. You stop funding, you stop subsidizing, you stop using money into fossil fuels. It could be carbon sequestration, it could be fuel rebates, could be anything. Hundreds of billions of dollars getting ashed while we ash the planet on fossil fuel subsidies. Because we haven't had that renewable electricity, we haven't had that green hydrogen, we've kind of been pushed down. It's all sorts of excuses. Oh, it'll never be commercial. It'll never be supplied in the quantities we need it. You know, blah, blah, blah. Now we know, let's take action. It's practical. It's implementable. Let's do it now.
Okay, if we do it now, is there going to be a shock to the energy system? Is there going to be a shock actually to economically? And is it worth, not talking about transition, just going from A to B?
Yeah, it's a fantastic question. A to B is the solution. Let fossil fuels do what fossil fuels do. Just burn their coal, burn their oil, burn the gas. At least they're pumping up carbon and methane into the atmosphere, honestly. Well, not that honest, because they don't measure methane, which is 90 times worse than carbon. But at least the carbon is being done honestly. Encourage the green hydrogen sector to come in really fast. Okay, it's there. There's renewable power all over the world. We now know how to make electrolyzers much cheaper, like 25% of the original cost. We know how to do that now. We don't have an excuse to get into it.
Does it need to be cheaper than oil and fossil fuel for it to be viable worldwide?
Well, right now it is. Okay, so let's just swallow that bit of financial data. Right now it is cheaper, and it's getting more cheap. It's the only fuel you know
Mr. Force,
which is declining in value.
You don't have enough of it, right, to power the world?
Yes. That's only because we haven't had policies to support it. If we had policies to support it 5-10 years ago, it would be everywhere. You'd see the global warming budget start to come down.
Yeah.
Now, we've got 5 or 10 years to make a huge difference. I need policy leaders all over the world to appreciate now, okay, big business is transacting with green hydrogen in multi-billion-dollar agreements. We now know it's here and it's here to stay. Let's spread it everywhere.
Coming up on the program, the hydrogen revolution. We'll speak with the CEO of Italian utility firm Snam about his new book and why he thinks green hydrogen will be competitive in just 5 years. Plus, how are airlines working to become more sustainable? We'll look at how Airbus plans to step up in the climate fight. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the SNAM model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, the so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, 600. Today, 100, and we see it going down to 50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia is very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course, you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick. It's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's world headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source. and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store. Hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's world headquarters in New York, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash. From
Bloomberg World Headquarters, I'm Charlie Pellet. U.S. stocks back in the green with the Dow, the S&P, NASDAQ all higher, wiping out earlier losses. In the early going, the Dow had been down as many as 287 points, down by about 0.9%. But right now, on this first trading day of the second half, the Dow is up 105, up by about 0.4%. S&P up 10 right now, higher by 0.3%. NASDAQ also overcoming earlier losses, up 6 now, up by about 0.1% at the lows of the day. NASDAQ had been down 106 points. Treasuries are surging. We've got the yield on the 10-year now at 2.88%, but earlier today, weak economic data added to recession worries amid aggressive Federal Reserve policy. As for the inflation outlook, Sarah Watthouse is senior economist at Wells Fargo Bank.
I think with the inflation environment, we don't think we've seen peak inflation yet. So we think that's probably more of a story for August or September. And so that's going to keep some of the nominal numbers elevated even as we see real growth slow. But I think when you get to the fourth quarter of this year, you will see a more material slowdown in nominal GDP coming both from some disinflation, not a lot, but also that weaker growth profile.
And today, J.P. Morgan Chase economists cut their U.S. mid-year economic growth forecasts after an influx of weaker data this week, most notably a slowdown in consumer spending. Semiconductor stocks are lower after a grim profit warning from Micron Technology last night. Micron shares, they're down now by about 3.9%. Among some of the other big chip manufacturers, Advanced Micro Devices down 3.97%. We've got NVIDIA down now by 4.4%. Intel lower by 3.3%. Recapping, stocks higher, S&P up 0.3%. Spot gold down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Good Friday afternoon from the Bloomberg Interactive Brokers studio in New York City. To our worldwide audience, you are listening to Bloomberg Business Week. I'm Paul Sweeney, sitting in for Carol Masser and Tim Stenovic, who are out today. Joining me this afternoon is Bloomberg Markets editor Michael Regan. Mike, thanks so much for joining us here in studio. We're going to steer the ship to shore, aren't we?
We'll try, Paul. We'll try, yeah.
All
Just
right.
through the weekend, at least.
Yeah, a little bit of green on the screen, a little mix. Coming up on the show, we're going to check in with Bloomberg's Kriti Gupta. She's at LaGuardia Airport all day to witness what is sure to be a busy travel day. Plus, Bloomberg Business Week editor Joel Weber. He's going to join us with the heist issue of the magazine. Lots of stories of skullduggery and thievery and stuff like that. So that should be good. Also going to take a look at crypto. It is ugly out there in the crypto space this year. And we're going to finish it up with a chat with former Mellon Bank CEO Martin McGuinn. He's just published his autobiography entitled, get this, From Swamp Poodle to Mellon Bank CEO.
Swamp Poodle.
Apparently, that's an area in Philly, I
It
guess,
is.
with Irish immigrants from way back in the
Where
day.
a lot of the Irish immigrants.
Okay, cool.
It's
That's
funny,
right
Paul. I
down.
started reading this book, and it sounds like my life story, just a few years ahead of me. I'm excited to
Yeah,
talk
it'll
about
be
it.
good. A couple of Irish Americans will get it going here. But let's check in. Let's set the agenda here, the Bloomberg Business Week agenda. We do that with Vince Signorella today. You know, Vince is the global macro strategist for Bloomberg News. He joins us on the phone from White Plains because, Mike, Vince is never, ever coming back into the office.
I always thought he was one of the smartest guys I knew, Paul.
And now
So he's figured it out somehow.
He has. He's got this thing wired. So there's no, what do they call it? Hybrid? No, he's not doing a hybrid.
It's not hybrid,
Yeah,
no.
okay.
He's one way.
All right, Vince, thanks so much for joining us here on our...
I'm an NFT. Nobody can find me.
Yeah, exactly. That's the way I like it. Vince, I mean, all right, the first 6 months of this year, I mean, can we just throw it away? What do we do? What did we learn from the first half of this year for the second half of the year? Is there more to come?
Yeah, unfortunately, there is more to come. I think what we've learned, at least what I've learned, and I'm watching the market, at least the bond market today, I think is starting to pick up on this. Well, all due respect, the Fed is really got themselves in a bad place. I mean, they made a horrible call a year and a half ago calling this inflation transitory. Now they seem to think it's here to stay. I don't agree with that. And I don't know what their real plans are anymore. I mean, the market's pricing in a recession right now. how they stay with their foot on the pedal if we go into a recession in the second quarter, which the Atlanta Fed is actually now predicting, is beyond me. And I just think they've got a bad message out there. They're going to hike. They're going to hike in July because they boxed themselves into a corner. But I can honestly see them having a bit of a conciliatory wording to that message and putting the markets on pause.
You know, Vince, I was thinking back to when you and I were sitting on the desk covering markets together back in, say 2017, 2018. And I was wondering if I went up to you back then and I said, all right, Vinny, I'm going to predict inflation over 8%. Also, I'm going to predict the dollar being about as strong as it's ever been at the same time. Oil over 100. What would you have said to me?
I would have said someday, but I wouldn't have thought in 5 years, to be perfectly honest, at the pace we were going. This inflation is really, you have to look at it. It's food and energy and it's supply chain dynamics. The Fed has no control over food and energy, and they have no control over the supply chain dynamics. They're trying to slow things down so that demand drops towards the supply levels and create some kind of equilibrium. Well, it's working in housing because it does work in housing as you raise interest rates. It doesn't work in food. People still need to eat, and it's not going to work in energy. You still need to heat your homes. So 2 out of 3, the Fed's batting, they're below the Mendoza line on this one, and it's not looking very good, I think, for their chances for the rest of the year.
But at the same point, if they're not trying to do anything about it, there's a lot of risk of a backlash there that they will bear the blame for inflation. So, how do they play that? If I made Vince the Fed chair next week, how do you thread this needle that they need to thread?
Well, I think you really hit the nail on the head. They're so worried they're going to be blamed for all this. I think it's why they did nothing when inflation started to pick up a year and a half ago, because they didn't want to be blamed for slowing the economy in the middle of a pandemic, when they could have very comfortably just started reducing the balance sheet. They didn't have to touch interest rates. And the same situation right now. I think they're very concerned that they're going to be blamed. They're going to get the Arthur Burns label of the 70s by not being able to tame inflation, so they're being super aggressive. And we are looking at it now where traders have now moved the end of quantitative tightening pricing in from May of next year to February of next year. Looking at the potential of an inverted yield curve when you look at twos versus where the market sees Fed funds in February of next year. And basically, you're seeing traders now beginning to price in a rate cut for either the end of this year or early next year. So all of that combined tells me if the Fed maintains this aggressive approach, they're going to have egg on their face. They're going to look really bad when they have to turn around and cut like 6 months or 3 months later.
So quantitative tightening, that begins, right?
Yeah, it already has. I mean, we're seeing a reduction in the balance sheet. The rates are up two rate hikes. We're very much expecting another one in July, although some are now calling potentially for 50 basis points that the Fed may back off that 75 basis point hike. I think would depend on the way we see data. But all data is rolling over. The ISM numbers today were terrible.
Yeah, we saw that.
Retail sales lately have been terrible. Housing sales have been dropping. Everything is starting to roll over. Look at gasoline prices. I did a story, I think it was yesterday, where gasoline prices lead inflation expectations, and gasoline prices have rolled over.
Yeah,
so
that's got to be the one chart everyone's looking
I've
at
got
first.
that up. Absolutely, down below $4.90.
But Vince, quickly before we go, one important question I got to ask you. What are you throwing on the grill in White Plains this weekend?
This weekend, first of all, believe it or not, I'm going to be making sausage and meatballs with my grandmother's gravy.
I do believe that,
Yes,
Vince. Knowing Vince, I do believe that.
But I will be throwing a filet mignon or two on the grill for sure.
All right, great stuff. Vince Signorella, global macro strategist for Bloomberg News, joining us on the phone from White Plains, where he will be grilling. Right now, let's get world and national news down in Washington, D.C. with Nancy Lyons. Nancy, what do you have for us?
Well, a week after the Supreme Court decision overturning Roe v. Wade, President Biden has been holding a virtual meeting this afternoon with some of the nation's governors to outline the administration's plan to protect access to reproductive health care. He says it is time to act.
We either elect federal senators and representatives who will codify Roe, or Republicans who will elect the House and Senate who will try to ban abortions nationwide.
Biden calls the Supreme Court's decision terrible and extreme and adds it will upend the lives of millions of women. Later this afternoon, he'll be heading off to Camp David, where he will be spending his 4th of July holiday weekend. Well, not even inflation can stop the rocket's red glare. Bloomberg's Nathan Hager has more from Washington.
Demand for fireworks is back in a big way this 4th of July, with social activities returning following the pandemic. The U.S. International Trade Commission says the industry prepared by boosting fireworks imports 27% in the first 4 months of this year. More than 90% of fireworks in this country come from China. Port and factory disruptions have been a major issue there. Phantom Fireworks, which sells sparklers and bottle rockets across the country, has boosted its prices about 30% from last 4th of July. A lot of that's due to higher transportation costs. In Washington, I'm Nathan Hager, Bloomberg Radio.
More than 43,000 Guard members are out of compliance with a direct order to show proof of vaccination or receive an exemption by last night's deadline. That's about 10% of the force. The Guard told the New York Times the Army National Guard has a lower vaccination rate than the Air Guard. The head of the Army Guard says soldiers will be given an opportunity to receive the shot. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy Lyons, thank you so much. We appreciate that. All right, we're going to go to Kriti Gupta later in the show in a few moments, Mike, just to get a sense of what's going on there in LaGuardia. But apparently, as bad as things may be here in the U.S., it's even worse in Europe. I'm seeing just some amazing stories of the Bloomberg story on the terminal. Summer travel chaos hits Europe hardest as delays escalate here. So I think they've got country-specific issues, airline-specific issues, labor issues. They've got it all hitting at one point. Plus, you've got Europeans who love to travel in the summer.
Absolutely. And I mean, Paul, it all comes down to you send everyone home during COVID, and, how do you get these baggage handlers and security guards? It's, people move on, find different jobs, and it's, I think that's a big part of the story, this demand surge, meaning a bottleneck of supply of everything from labor to materials. It's just...
but I'll tell you what, I have no problem heaping almost entirely all the blame on the airlines. We gave them billions of dollars. Your job is to forecast demand and meet that demand.
That's fair.
That's it.
That's fair. And don't schedule flights that you're not going to be able to fly. That you don't have the labor for. They should. I'd rather not be able to book a flight.
Yes.
Than book one and get there and be told it's canceled.
I wonder if we're going to get to the point where the airlines themselves absolutely have to train their own pilots and incur that cost, as opposed to asking individuals to incur the cost to get into a feeder airline and then so on and so forth.
Yeah, could be. And there's also just that competition for the labor at the lower skilled levels below it that I think is a big issue too.
Yeah, I mean, it's do I unload bags at LaGuardia, or do I work in the
crypto
warehouse?
or something? Maybe not crypto anymore.
We're going to get to that, so we'll see. But Kriti's at LaGuardia. We'll get the ladies. I'm just going to ride my e-bike around town this week, and I think I'll be pretty happy. Ride it to the pool and we'll be fine. So we'll see. Looking at these markets, kind of mixed on this Friday. Nice quiet, as you would expect to see here. But we'll see. We're getting into the final Friday before this July 4th, and we're going to have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Choppy session. We have got NASDAQ back in the red right now. Little change, but down 3 points on this first trading day of the second half. S&P 500 index up 9, overcoming earlier losses, up by about 0.3%. At the worst level of the day, the S&P have been down 0.9%, but now showing a gain of 0.3. The Dow Jones Industrial Average is up 116, also overcoming earlier losses, up by about 0.4%. The 10-year yield 2.88%. Treasuries surged after an ugly first half as weak economic data added to recession fears amid aggressive Federal Reserve policy. Spot gold lower little change, down by less than 0.1%, down by about 50 cents the ounce to $18.06, while West Texas Intermediate crude oil rallying 2.7% now, 108.64 for a barrel of WTI. Kohl's board has taken the retailer off the market after failing to agree on a potential $8 billion sale to Franchise Group, sending the department store operator's stock to its biggest drop in 2 years. Kohl's plunging now by 17.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. You know, Mike, I want to go back to something that Vince Signorello was just saying, how the Fed's put itself in a kind of a tough spot here, because we've got the bond market here. Again, just to highlight it again, because it really jumps out at you. The 10-year bond, it's up 1 4/32 today, pushing that yield down to 2.88%. It's like the market's kind of telling you the overheating risk, maybe not so bad.
Well, I think the initial fear was, oh, this inflation's out of control.
Yep.
Sell all your bonds.
Yep.
Now everyone's worried about recession. Buy them back, and you get this volatility in the bond market that, regardless of what the future holds with inflation and recession and whatnot, volatility in the bond market's not good for anyone. I mean,
Right.
when your risk-free rate is jumping 10, 20 basis points at a time on any given day in different directions, that just is unsettling, I think, for the entire financial community to try to really, calibrate expectations and calibrate, their returns against a benchmark in the bond market interest rate that's just all over the map. So it's, regardless of what signal it's sending about the economy, that price action alone and those movements in yields are
So
a
it kind
little
of begs a
unsettling.
question, I guess. We'll go back to what the Fed will do in their July meeting. I think for a while there, 75 basis points was kind of the consensus. I wonder if that's still the case.
I'm guessing, at least for now. We still have a lot of data between now and then. We'll get some more inflation data. The inflation numbers have at least stopped surprising drastically to the upside compared to what economists are expecting. So that's good news. So most of them, PC, core PC, it's coming down a little bit, maybe not as fast as they'd like, but it's moving in the right direction. But I think, once they sort of get that 75 basis points in people's heads, it's going to be hard to pull that back and go to 50 or 25 unless there's really some more dramatic news in between now and then.
Right, and we talk about inflation, and Vince called that out as well. Gasoline, I love this daily national average gasoline price. We actually have a ticker for it, 3AGSREG. $4.84, which obviously is a really high number, but it peaked at over $5 just a couple of weeks ago. So trending in the right direction, and that's something that consumers really feel, particularly as they're heading
absolutely.
out.
And one thing I always think about with gas prices, when you hit $5 a gallon, I'm kind of a nerd when it comes to round numbers, right? And their psychological impact.
Right.
So if you got a 20-gallon SUV with a 20-gallon tank,
Sure.
$5 a gallon means you're paying over $100 to fill that thing up. So I think there's like a confidence thing that happens when your credit card gets hit for 100 or triple digits compared to say 80 or $90. And I think it's a huge part of the consumer confidence story is what is the cost to fill up a tank of gas? I mean, and to see it come back down, like you said, no one's dancing and celebrating over 486 or whatever it is, but get it under 5, have it move in the right direction, and you might get a little of that confidence back.
A couple of weeks ago, thanks to Matt Miller, I was lent a Ford F-150 Lightning to test drive for 4 days. You know, Matt's got all of his contacts.
Matt's got like...
of course, he knows everybody.
Yeah.
So, and it was just at the time when gasoline was going over $5 a gallon. And as you drove past these stations, you're like, now I get it.
Now you get it,
now
yeah.
I get it. I mean, it's really interesting that decision that people are going to have as more and more of these EVs come into the marketplace. And I'll tell you this one, I'm not a truck guy at all. It's the first time I've ever driven a pickup
sounds
truck.
pretty cool.
Awesome. I mean, it was just awesome.
I love that that's the one Miller loans out to you. You know, meanwhile, he's probably tooling around in a Maserati or something.
Yeah.
Or,
That's what he does. All right, let's check out what's going on. We know the roads are bad. Let's check out the airports. Kriti Gupta, Bloomberg Markets correspondent. She's on location at New York City's LaGuardia Airport. Kriti, how are things out there? Is it just a crazy Friday? Is it unusually bad? What are folks saying out there?
You know, it's interesting. I came here about 8 o'clock and I expected complete chaos, as you traditionally see on July 4th weekend, but it's actually calm. It's orderly. A lot of people were reading the news, anticipating perhaps some of the craziness that was supposed to happen this weekend. Nevertheless, 12.3 million travelers slated for it. But you know what's interesting is as we talk to people here on the ground, a lot of them are saying, well, our family was already out and about earlier in the week. They already did their traveling. I'm just catching up just now. So, you know, even if you talk to things like flight attendants or with people at the check-in counters, I should say, they said that, you know, you should have been here 2-3 days ago. That's really where you saw a lot more congestion.
Yeah, Kriti, I was going to ask, if you look up at the schedule board, are you seeing many cancellations, delays, or does it look like smooth sailing or smooth flying, as it were?
So as of 8 a.m. this morning, when I strolled in here, you did not see any delays or cancellations throughout the day. At about 2 hours in, around 10, you saw about 4. At around 12, you saw about 5. And now we're looking at about like 9 or 10 delays and 2 flight cancellations. Now, some of those cancellations are international flights, so keep that in mind. The domestic ones are mostly delayed, but you are seeing as the day goes on, a lot of those delays are actually in the Midwest, which is interesting. Dallas, Kansas City, even Miami, which is in the Midwest, but still a major hub. That's where you're seeing a lot of those issues really magnified.
All right, very, very good. We appreciate that. Kriti Gupta, some suboptimal audio there from Queens. I think the hardest part of her day is going to be getting from LaGuardia back to Manhattan. You know what I mean? That's going to be the thing.
Yeah.
So, Kriti Gupta, we appreciate that. Markets correspondent on location at New York City's LaGuardia Airport here. So, again, we got the Dow making a little bit of a move here, Michael.
Yeah, up about 0.6%, almost 200 points in the Dow. S&P's up about 0.6%. Hard to get too excited about that kind of move higher in the market, Paul. But I will say it's nice. You know, we're starting a new month, a new quarter. You know, you get all that window dressing and rebalancing out of the way, and hopefully things are calmed down now for a little bit.
All right, you're listening to Bloomberg Business Week. We're going to have more coming up on this Friday before the 3-day July 4th weekend. Perfect timing. Some decent weather. More coming up. This is Bloomberg.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, this is Bloomberg Business Week on Bloomberg Radio. Paul Sweeney and Mike Regan sitting in for Carol Massar and Tim Stenovic. Coming up, we're going to check in with Mario Cordero, Executive Director of the Port of Long Beach. Apparently, they got a workers' agreement that is expiring. So what's happening there? What's happening just with the whole supply chain situation that's been such a big story since the beginning of this pandemic. But first, let's go to Charlie Pellet and get a Bloomberg Business Flash.
Hi, thank you very much, Paul Sweeney. We've got stocks sailing higher right now with the Dow, the S&P, NASDAQ very much in the green. Look at the Dow, up now by 206 points. You got to keep in mind that in the early going this morning, we had the Dow down 287, down by 0.9%. But right now, a 0.7% gain for the Dow, up 203, first trading day of the second half. S&P up 22, a gain there of 0.6%. NASDAQ up 39 now, high about 0.4%. The S&P, by the way, very close to session highs. The 10-year yield 2.88%. Spot gold right now up 50 cents the ounce to 1807, up less than 0.1%. West Texas Intermediate crude oil up 2.3%, 108.21 a barrel on WTI. Treasuries surged after an ugly first half as weak economic data added to recession fears amid aggressive Federal Reserve policy. Marta Norton is Chief Investment Officer at Morningstar Investment Services.
Right now, I think the consensus is saying that, inflation is peaking, whether it's peaked, now or whether it's going to peak soon. It's kind of running its course, and a recession is a risk, but it's a lower risk, and if we do see a recession, it's a more moderate recession.
And speaking of inflation, how about those airfares? Is that stopping people from traveling this weekend? 4th of July travelers are expected to fly in the highest numbers since the start of the COVID-19 pandemic, stressing a beleaguered transportation system already experiencing tens of thousands of cancellations and delays. Airline stocks, though, they are flying higher today. UAL, for example, up 2.75%. American up by 3.3%. Delta up 1.9%. Southwest up 1.1%. JetBlue up now by 1.9%. Again, recapping, 10-year yield 2.88%. Stocks solidly in the green. S&P up 23, up 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, good stuff. Thank you very much here. All right, a brutal first half of the year. Just looking at the S&P 500, off a little bit more than 20% for the first half. People are telling me, and these are some pretty smart people, are telling me that it's got to get better in the second half. I mean, and the data kind of shows that, but I don't know. It just feels ugly out there. But Jess Metton, she joins us. She does this stuff for a living. She's an equities reporter for Bloomberg News, joining us live in the Bloomberg Interactive Broker Studio. So, Jess, you're out with the story here. Even the Fed can't rescue market if earnings tank. So that's the next thing we have to worry about is earnings?
Exactly. And it's this sort of idea, especially when you're talking with strategists, portfolio managers, that thought process that once we begin to see any sort of indications of peak inflation, and then potentially if the Fed could turn more dovish, that'll be the key to turn markets around. And so I was talking with Nick Colas, who's the co-founder of DataTrek. He also was a sell-side analyst for a long time. So he was pointing out as far as what similarities he sees to now compared to other time periods. And he pointed to the dot-com bubble and looking at what happened with the Federal Reserve when it was trying to cool inflation, when the economy at that point was still resilient. But going into 2001, there were a number of emergency rate cuts by the Federal Reserve because there were those concerns about whether or not the economy could fall into a recession. But even when that happened, corporate earnings still hadn't bottomed yet. And once they did bottom, that's when you did begin to see a rebound in the market. So it wasn't necessarily because of the Federal Reserve cutting rates. So for instance, once it shifted its stance, for the first 8 months of 2001, stocks continued to drop with the S&P 500 falling 14%. Obviously, there's this caveat of September 11th, which happened later on that year, and there were those geopolitical concerns there. But just the outlook that potentially, even if the Fed does end up having to turn dovish and then eventually maybe ease some of its policy, there are all those indications of what's going to happen with corporate America's earnings growth and the threats that it's under because of those margin shredding inflation pressures right now.
Right, Jess, I was reading your column today. I had two main thoughts. One was, wow, this is really well edited, Paul.
Exactly.
I mean, it's immaculate.
I picked that right up.
Yeah, as you may have noticed. But this line, to me, is tremendous. So the S&P lost 16% in the quarter. And then, Jess, you write, since 1950, there have been 7 instances when the benchmark gauge lost at least 15% in a quarter, according to LPL Financial. In the next 2 quarters, stocks were higher every time with an average return of more than 17%. Now, I know everyone says, past performance, no guarantee, blah, blah, blah. But that's a pretty, as far as those type of stats go, that's pretty good. But I guess I feel like there's not a single investor out there who believes the analysts right now. Is there anyone who believes the analysts' estimates for earnings are in the right ballpark? It seems like almost everyone you hear about is just completely ignoring what the analysts are saying and assuming they're wrong and that they're going to be cutting these estimates pretty quickly.
That's what it seems like the consensus is, unless you are talking with the sell-side analysts.
They still
believe they still believe this. But a lot of them point to just the indications that we've talked about a lot, as far as just they know the second quarter is going to be ugly, so they want to know what is it going to look like the next few quarters. And we've already heard from a number of companies this week with pre-announcements, again today with Micron Technology, and then also Kohl's. It clearly had those issues as far as trying to sell itself, but also just again warning about its second quarter results as well, and another issue for those retail type names. But again, going into second quarter earnings season, they really want to know what is it going to look like the next 6 months to the next year, not necessarily what the second quarter is going to look like, because they're under the assumption that it's not going to look that great for companies.
Well, one of the reasons I like this article that you wrote, because you chatted with Nick Colas.
Yes.
Yeah,
and Nick is a co-founder of DataTrick, and he's one of the smartest people I speak to, and he explains it in a way that I understand. So,
and he worked in sell side
Yes.
for a long time, so he even went through the process with me of talking about how challenging it is, even on the sell side, being an analyst, because it's not, what he was saying is basically it's not their job to be a macro economist. They need to get that information from the companies as far as their outlook. And so sure, they might see these indications with some of the macro data, but a lot of that is backward looking. So they need more forward looking reports. And even portfolio managers that I speak with, they'll buy this research, but sometimes they don't necessarily go on these sell, buy, neutral type recommendations. It's more, there's so much research in it that they're basically doing their homework for them.
Well, that's why when we created Bloomberg Intelligence 13 years ago, we made the important decision not to do buy, hold, sell ratings, because Bloomberg customers don't care what Paul Sweeney says about the Walt Disney Company. They just want data and analysis of that data. It's their job to buy, hold, and sell the Walt Disney Company.
I also feel like, Paul, as an analyst, if you come out with a buy, sell, or hold recommendation, it's going to influence your thinking. You're kind of wedded to that. You're tied to the mast on it to some degree.
Yeah, it was big. So that was kind of some of the thinking we did 13 years ago when we created Bloomberg Intelligence, which is now the best research department on Wall Street, bar none. I will say that without a doubt. Jess Metton, thanks so much for joining us here. Jess Metton, she is equities reporter for Bloomberg News, joining us live in our Bloomberg Interactive Broker studio. And Mike, she gets huge points, as do you, for being in studio today when so many others are out. All right, let's get the latest check on world and national news down on our 99.1 studios in Washington, D.C. with Nancy Lyons.
Thanks, Paul. Russian missile attacks in residential areas killed at least 19 people in a Ukrainian town near Odessa today. The Ukrainian president's office says 3 missiles fired by Russian bombers hit an apartment building and 2 campsites. Some fear Russia is getting the upper hand, but retired Brigadier General Mark Kimmett tells Bloomberg the U.S. and its allies won't let that happen.
I think if this starts getting out of hand, NATO will step in terms of material support, get more equipment, more ammunition, more capability to the Ukrainians to stop that forward movement inside the Donbass and outside the Donbass, for that matter, as well, as we saw with Odessa today.
Retired Brigadier General Mark Kimmett. Ukraine's President Volodymyr Zelensky says a terrorist country is killing his people. American Brittany Griner appeared in a Moscow courtroom today. The WNBA star has been detained in Russia since mid-February after Russian authorities say they found cannabis in her possession. U.S. Embassy spokesperson Elizabeth Rood spoke with reporters following today's proceedings.
The American government cares very deeply about this case.
and about Ms. Griner's welfare, as do millions of Americans, as well as we care about the welfare of all U.S. citizens in prison overseas.
Elizabeth Rood says she met with Griner in the courtroom and says she's in good spirits and is keeping the faith. The trial will resume next Thursday. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, good stuff there. Appreciate it. Hey, Mike, remember this story about the parents bribing to get their kids into colleges? That was a big thing.
Yeah, absolutely, Paul. Yeah, and as a kid, as a parent trying to get a kid into college these days, without much bribe money in my pocket, it's very frustrating to see these stories. And I know we've got a big one out today.
Yeah, it's an interesting story. It's from the AP. A former Georgetown University tennis coach who once coached former President Barack Obama's family was sentenced Friday to 2.5 years in prison for pocketing more than $3 million in bribes in exchange for helping wealthy parents cheat their kids' way into school. I honestly, before this story, this whole thing broke, I didn't know this was a thing, really.
Yeah, well, remember the whole Lori Loughlin,
the
actress, and boy, it's just it's amazing how widespread it's been and how corruptible some of these coaches are at these schools. It's it's kind of it's unsettling in a way to think you're trying to set an example for your kids, send them to a great school.
Yep.
And your kid gets in and finds out that this is how the kid next to him got in. It's kind of in addition to the whole student loan controversy and the problems with that, it's really I think going to create this sort of rethink of higher education.
I think people are rethinking it in general.
I think so.
The value. Like when you and I came up, it was that's the ticket. You have to.
Yeah, it's your only way. Yeah, it's your only way to a good career.
Now the kids with the technology and so on and so forth, I can go out and if I can code, I can exist. If I code, I can be successful.
Absolutely.
Or the trades are so valuable.
The trades, or you hear about what kids are learning just on YouTube these days. There's such a wealth of information available for free that you can, education doesn't have to cost a fortune anymore. So I think the colleges need to sort this out and figure out where the future of education lies.
Yeah, because the value proposition, I think, for a lot of parents and a lot of kids being called into question, maybe a little bit more than it ever was in the past. All right, we're going to have more coming up. We've got some green on the screen. This is Bloomberg Business Week.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg Quarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ are all advancing right now, close to session highs. In fact, session highs right now on the S&P up 26, higher by about 0.7%. The Dow up 238, up by about 0.8%. Got to keep in mind the worst level of the day. We had the Dow down 287, down by 0.9%. 10-year yield 2.88%. Spot gold up $1.50 the ounce to 18.08, up by about 0.1%. Crude is moving higher. WTI, West Texas Intermediate up 2.4%, 108.25 a barrel. Stocks higher after 4 straight days of losses as investors continue to worry that the Federal Reserve's aggressive rate hike path to tame inflation may tip the economy into a recession. But right now, equities higher across the board. First trading day of the second half with the S&P up now by 25 points. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, that's good stuff. Always appreciate checking in with you. Hey, you know, Mike, one of my favorite parts of the Bloomberg Business Week show with Carol and Tim every day is when they get to check in with Joel Weber and do kind of like a deep dive on what's going on with the Bloomberg Business Week magazine. We have Joel Weber joining us, editor for Bloomberg Business Week. He is on the Access line from Brooklyn. And Joel, this one is a big issue for you guys. It is your heist issue where you get into all kinds of skullduggery and thievery and stuff like that. What do you have for us this time?
Oh my gosh, it's like the ultimate summer beach read. So we always want to put it out right before 4th of July to get everybody's
that's good thinking.
Summer off on a good note. And this year, a number of years ago, we decided that this theme, this topic, deserves to go cover to cover. So we go from the front cover to the back cover, and we go all in on heists, which we open with a little opening paragraph that just also reminds people that, you know, these are mostly intended as sort of skullduggery stories, but there are some real heists in the headlines right now that people feel very much affected by. So we acknowledge those as well.
Joel, you know, every year I'm kind of kicking myself for not getting a story into this magazine. It's my favorite issue.
I think that one. I'm still waiting on that one. You know, Mike? It's okay.
I think for next year I'm going to really get in the spirit and just steal an idea from Zeke Fox. You know.
Yeah, you always get good.
But what I haven't read yet, Joel, and I've read a few of them, Paul, I always think this is Joel's attempt to get land a Hollywood screenplay with this issue. I feel like all of these could be turned into a movie at some point. But Joel, talk to us about the lottery lawyers and what that heist is about. That's one I haven't had a chance to read yet.
Yeah, so this is out new today. Simon Van Zylenwood, he's a regular freelance contributor of ours. He found a character nicknamed the lottery lawyer, and you know, there's some funny little inside Business Week jokes. We've long wanted to do a Florida issue. This story takes place on Long Island. It made me want to do a Long Island issue, which I think would be pretty hilarious. But the story is about a lawyer on Long Island who basically created a new business, which was advising people who won Mega Millions or Powerballs, and he put together actually a little modest portfolio of winners and then helped them start advising them and sort of being a financial advisor to them. And that's where the story kind of snowballs, and it turns into this cast of characters that may or may not have scammed him. There is a ongoing lawsuit, so I have to say this is all allegedly, except that the details of the story, you just can't make this stuff up, and the cast of characters include some people who are sort of adjacent to the Long Island Cosa Nostra, so it just makes for incredible reading.
All right, a little bit more somber one perhaps is Taken. Tax liens cost generations of Black Americans their land. How does that work?
Yeah, so this was a far more sober one. And Margaret Newkirk came to us with this a number of months ago and said that she had found out about a family in South Carolina that generations ago actually ended up losing their land. And the story is tragic. It's about the great-grandmother who basically was paying what she thought was taxes to via sort of a white intermediary in South Carolina who was taking that money to the government on her behalf. It turns out that he had actually purchased the land from the government via a tax lien, and that the money that she was giving him was actually rent. And he broke this news to her upon the time that he was actually selling that land. And the story goes into not only the family story of how they missed out on this land that is actually just incredible location in South Carolina, but also how this is a practice that writ large across America not only used to happen, but continues to happen. And because of that, Black Americans end up losing out on wealth, source of wealth, and that intergenerational thing that happens between families is something that a lot of Black Americans have missed out on. So we felt like that was an appropriate one to bring into the heist issue as well.
Yeah, that's a powerful story. You know, not all heists come from guys wearing masks and gloves. Joel, if you step back for a minute, you know, I don't know how many years in a row you've done this heist issue.
5.
5 years. So you're probably up to 30, 40 heist stories by now. Where's the heist capital of the world, in your opinion? I'm going to say Boston. I don't want to offend any Boston listeners, but maybe it's because of Zeke. We get a lot of Boston stories. But is there sort of a heist hot zone in the U.S.?
You know, I would actually put it as Florida. I think the nefarious deeds that go down in Florida are make it a special place. I think we went a little light on Florida in this issue, but that's sort of what's inspired that idea of a Florida issue. But
Florida man,
you know, the other one that I'll just mention, sleeper to your Boston, Los Angeles, and there's another great one in this issue called the Open House Hunters who hit LA's Rich and Famous. And this story is incredible because it's about this duo who would go scope houses. Also allegedly, this trial is coming up in August. They would go scope open houses, and it turns out a lot of these open houses were owned by celebrities, and so they were actually able to come into homes, kind of scope where the goods were, and then come back later and do their stuff. And this was a years-long effort. Wow. This was a massive crime spree, and they took luxury bags. They hit Usher. Usher happened to have LeBron James's Cleveland Cavs ring from when he won the championship. That got stolen. It's just an amazing read. And some of these break-ins were just like, I think the cops and the detectives were like totally befuddled. Like they had like parkour abilities on top of everything else and were like dropping in from skylights like in Mission Impossible. So it's some fun stuff here.
It gotta be hard to fence LeBron's ring.
How do you, I don't know, I guess it'd be like a dealer, I mean an individual, I guess.
I don't know, you can always find somebody on the Clippers.
Very good. Hey, real quick, this crypto heist gone wrong here. It just seems like there's going to be more and more of these things as more and more stuff goes digital.
More and more, but you know, this is the Zeke story, Zeke Fox, and this is about Bitfinex, and it might be, might go down eventually as the biggest heist of all time. Certainly the biggest Bitcoin one, and it was based on this hack that happened a number of years ago. And then nothing really happened, but the authorities kind of kept an eye on it, and it turns out that this all came to a head in January with a bunch of headlines about Razzle Khan and Dutch. And so you can't make this one up. She was like a Forbes contributor and a rapper, and the YouTube videos are amazing. So it's that is our crypto story for your long weekend.
Yeah, that's what we need. All right, Joel Weber, thank you so much for joining us. Joel Weber, editor for Bloomberg Business Week, joining us on the Access Line from Brooklyn. We'll have more coming up. This is Bloomberg Business Week. Good afternoon.
close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
It's countdown to the close, just 60 minutes left in your trading session. Caroline Hyde, Katie Greifeld, Shonali Basak, they're both in for Romain and Taylor, joined now by our colleagues Paul Sweeney and Mike Regan, in for Carol and Tim. There is a theme here, and it is that July the 4th is almost upon us, and we waltz ourselves into a long weekend with, across TV, radio, YouTube, a moment, Paul, to dissect, where a market that's trying to kind of push into the green as we head towards some quiet period.
Yeah, trying to push into the green here. We've got a little bit of movement up to 7/10 up on the S&P 500. But since Tom Keene is not here, I want to talk about Bitcoin real quickly. It is up 3.6%, but we're still below that key 20,000 support level.
You know, Paul, one of the amazing stories this year has been the China stock market. Not getting as much press as the U.S. stock market, but I like to look at the China NASDAQ Golden Dragon Index. It is up today, down a little bit for the week, but outperforming the S&P 500 this week. And remember when everyone said China was uninvestable? Well, Caroline, that index is up about 55% since the middle of March. So might want to rethink that one.
Yeah, finally, we've been seeing someone's buying a dip somewhere. At the moment, we're buying a bit of a dip in the S&P 500. Maybe it's because the bond market just shut. And they were like, oh, well, these yields, we can stop looking at them now. And we're going to instead focus in on what the equity market is telling us. Because the data had been ugly earlier today in terms of manufacturing. The S&P 500 had been underwater, but we're now up 0.6%. But look, volumes are muted. We're down about 7% in terms of volumes compared to your average. The Dow Jones Industrial Average also up 0.7%, 220 points higher. The NASDAQ up 0.5%. That had been the laggard, but now currently trading up to the tune of 53 points. Russell 2000 even getting a look in, up 0.8% after what had been, of course, an ugly close to an ugly first half yesterday, Shonali.
Not huge jumps, but all green indeed, Caroline. We have utilities leading the S&P sectors higher with a jump of more than 2.1%. We have consumer discretionary second on the way at 1.5% higher. We are still higher on infotech on the day, though pretty much flat. Communication services also higher on the day, less than about 0.2%. So those are kind of the range of movement on the day.
And if we drill down even more specifically into some of the individual names, I'm taking a look at Etsy. I mean, there's a lot of analyst action on Etsy. You had Evercore lower its price target, but maintain its outperform rating. And yesterday, you had Etsy rated as a new outperform at Raymond James. Etsy up 8.7%. Let's also talk about Micron, because Micron, that's one of the things that is still lower today. Earlier today, the memory chip maker said that order demand getting weaker for smartphones, for computers, not a great sign there. And you can see it's dragging down NVIDIA down even more than Micron itself, down about almost 4%. But let's end on a good note and talk about Amazon. No clear news here, no clear catalyst, but Amazon, it is the biggest points gainer in the NASDAQ 100 right now. That's helping to drag the index into the green and beyond with just about an hour left of trading.
Meanwhile, I mean, you talk about trying to end on a higher note. What really ended on a higher note over in Europe was the inflation reading. Once again, we talk about time and time again that what's weighing on this market. The weighing is the monetary policy, the effect that we think that will be taken to attack things like this. Eurozone at a record high level of inflation, 8.6%. It's interesting, though, that we are starting to see, well, European bonds, of course, caught that massive bid today as many dialed back their expectations for where really some of the buying, where some of the ECB will go in terms of hawkishness, because, well, there too the data is rolling over. Like we had here in the US, manufacturing looking weak. We're starting to have some of those European data, economic data, showing that we're already hitting a slowdown. And of course, overall, we are seeing global central bank leaders gathering. They gathered earlier this week in Sintra in Portugal. And Mohamed El-Arian, Bloomberg opinion columnist, president of Queen's College, Cambridge as well, gave his thoughts on, well, their generally hawkish commentary earlier on The Open. Take a listen.
The message was crystal clear from this week's remarks by central bankers. They worried about inflation getting entrenched, rightly so. So I think the notion that the Fed will blink early this time based on credit issues is not likely to happen. I do think, and you and I have discussed this, that we face the risk of a flip-flopping Fed in a few months when they realize that the economy has slowed, but inflation is still not under control.
And that's the age-old thing that we're going to be, well, dissecting until the next Fed meeting and towards the end of July, really is what the Federal Reserve, what central banks do, Katie, and what the overall sentiment is going to be like as we try and teeter along, not plunging any of these economies into a hard landing. It looks harder and harder to do.
And when we think about how motivated the Fed is to see this through, to really tamp down inflation, it's interesting to hear from Elarian that, credit market stress, it might not be what gets the Fed to pause this time around because, when I still talk to analysts, to investors, they always say watch spreads, watch high yield spreads in particular, but maybe that's not the thing to watch anymore.
Yeah, and Katie, one thing about those spreads is it's hard to really figure out where they're going when the volatility in the underlying treasury market is so wild. Outside of the pandemic, March of 2020, this is some of the most volatile treasury action we've seen. If you look at the TLT, the exchange traded fund, first inflation was on everyone's mind and yields went shooting up, and then it switched to a growth concern, recession concern. Everyone's buying them back. So if you look at the TLT, it's up about 3.2% this week. That's its best week since 2020 in the middle of the pandemic, Paul.
Yeah, Mike, as we just were chatting with Vince Signorella, Bloomberg Squawk, just moments ago, he painted the picture that he feels like the Federal Reserve has really painted itself into a quarter here, going to your point of volatility, if this Fed's going to start flip-flopping here on rates. And so that kind of goes to your volatility question and what that we've seen in these markets.
It's interesting. It's hard to just focus on rates when quantitative tightening is also underway. And you look at what's happening in the banking system, there's a lot of concern that liquidity is just not there, that market makers are just not going to show up in the same way that they had in more liquid times in the past, let's say. And so that idea of spreads, maybe people are sitting back right now and saying, all right, let them blow out. Because at the end of the day, and a recession is already expected, the question is how deep and how long.
Well, Sonali, to that point, I know there's definitely stress when it comes to trading in both the Treasury and the equity market. I mean, you've been hearing people talking about the fact that liquidity is really low for quite a long time now. Now we are officially in QT.
Let's talk a little bit about where, of course, Paul was taking us with not being aligned with Tom Keene on your radio show today. You could talk crypto, and we have had an enormous amount of news on that front. We've had yet another key trading area, Voyager, this one saying that it's going to be shutting up shop, temporarily suspending trading, deposits, withdrawals. We've, of course, had the news on BlockFi, which our own Sonali Basak had an amazing interview with Sam Bankman-Fried all about, well, whether he's the white knight at the moment and how he's going to be perhaps purchasing some of these more beleaguered companies. Bitcoin, though, what a ride that it did have today, Paul.
Yeah, up a little bit, up about 3.5%, 19,400 call it, but still a wild ride. So we'll keep an eye on that. That does it for now. We'll be back together again live on TV and radio and YouTube at 4 p.m. for our Beyond the Bell coverage when we take you through today's market close.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, let's get a check on the latest world and national news. We do that with Nancy Lynch. All right, we're just looking at these markets here. We've got the S&P 500 up 0.6%. It seems to get a little bit of volume picking up here, just a little bit of momentum picking up here. But, I think people are, the question we get a lot, Mike, is, after that terrible first half of the year, can we have any expectation for better performance in the second half of the year? And a couple things that the market's got to deal with right off the bat. Number one, earnings. And then, of course, number two, this Federal Reserve that tries to balance between inflation and growth.
Right, and Paul, as you know, that second quarter earnings season is so important to get that sort of update on the full year forecast and next year from all these companies. So, as I was saying yesterday, I think the one issue is whether there will be a lot of companies that simply don't give any guidance at all. They just throw their hands up and say, we can't figure out what's going on the rest of the year. We're pulling back guidance, or we're giving a real broad range. And that could be almost more unsettling than a lowered forecast.
I agree with you 100%. I would not, the companies I used to follow closely for 30 years on Wall Street, if they tried to pull that at this point of the cycle, I would have to say no go,
There'd be
folks.
trouble. Yeah.
There'd be trouble because we do, in fact, it's one thing to be going into a global pandemic, which nobody has experienced before. But now we got inflation, got maybe slowing growth. You guys can deal with that. But it'll be interesting to see how these earnings roll out and the guidance, as you mentioned. All right, right now, let's get World and National News. We'll do that with Nancy Lyons down in the 99.1 newsroom in D.C.
Thanks, Paul. Brittany Griner will need to wait another week for her trial to resume in Russia. Today, the WNBA star appeared in court accused of having a gram of cannabis oil in her luggage when she arrived in Russia back in February. Her attorney, Alexander Boykov, says today they heard testimony from prosecution witnesses.
We had 2 witnesses that are with the customs, and we expect the next hearing on the 7th of July.
Again, Griner's attorney, Alexander Boykov, a U.S. official, spoke with Griner in the courtroom and said she's in good spirits and keeping the faith. The supply chain could be in for another jolt. A labor agreement between West Coast dock workers and their employers is set to expire this afternoon, and a coalition of local, state, and national trade associations is asking President Biden to step in and persuade both sides to extend the agreement while talks continue over a new contract. Bloomberg's Ed Ludlow says even if there is a short-term extension, doubters are preparing for the long-term impact.
Just because we're calm, we're sanguine about a positive outcome eventually, you see some of the biggest shippers rerouting to East Coast ports. And that's a pretty strong indicator that this is being taken seriously in terms of how it disrupts flow of cargo in and out of the West Coast.
Bloomberg's Ed Ludlow. New York City officials have ended the city's COVID-19 alert system that used color-coded categories to inform residents of the threat level. The change comes as the city this week reported a medium risk level, with New Yorkers being encouraged to continue wearing a mask in public indoor settings. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, back in the day when I worked on the street, when you had a market down 20%, it makes it kind of hard to start walking to a client's office and say, I think you should go public here. So it's going to be tough in the IPO market. But you know what? It's also tough in the SPAC market. I mean, there's a story, Bailey Lipschultz has a story out on the terminal. Wave of SPAC deals canceled in latest blow to stumbling industry. I mean, at least 4 acquisitions were called off in the last 24 hours. It highlights to me I guess the underlying concern I had about SPACs. To me, a SPAC was, I give my money to somebody, and that somebody's going to go invest in some area that his or her expertise. Right. So John Malone in my world, right? You know, the cable cowboy, the guy who's like the greatest. Okay, I'd give John Malone money to just go do whatever he wants to go do with it because I trust him and he's got a track record. But I'm not sure I'm going to do that with A-Rod.
Well. You're not giving A-Rod?
I mean,
well, I think, you know, that's the whole story, isn't it, Paul, is that this used to be a niche product that you would trust a handful of players to pull off a SPAC deal. It was a very sort of, you know, not how many SPACs would price in a year? I don't know. Not many.
Right.
And then it's such a symbol of how frothy and how ridiculous markets got in 2020, 2021, where just everybody and their brother was launching a SPAC. And, you know, none of them had a trusted track record. I mean, certain ones did, granted, the big players, but they got so over their skis, so overextended, trying to just ram too many into the market at once. Look at, we have a D-SPAC index, a measure of...
I didn't know there was such a thing.
Yeah. So it's a measure of some of the largest companies acquired by blank check firms or SPACs, down 15% for the week.
Yeah, so there's been... I guess 4 special purpose acquisition companies tie-ups have been called off since the end of Thursday's trading, bringing the year's total to 30. Yeah. So that's SPAC deal breaks. We actually have a chart of SPAC deal breaks, and it's been pretty big in 2022. So it's interesting. Was for a lot of folks a speculative part of the market, but it's getting perhaps a little bit sobering here.